By virtue of the programming for today, we have scheduled it into 3 segments. We have an introductory segment, then we have presentations and a panel discussion. For the introductory segment, we will run this from 8:30 now up until 10, and we will have the chairman of the Capital Markets Authority as well as the chairman of the Nairobi Securities Exchange giving us introductory remarks. Thereafter, we will have the Chief Executive Officer of the Capital Markets Authority give us an overview of the capital markets, a presentation by him by virtue of a speech. Then we will have the Chief Executive Officer of the Nairobi Securities Exchange, Mr. Geoffrey Odudo, give us a presentation on the capital raising opportunities. And then we'll have the Chairman of the Kenya Association of Stockbrokers and Investment Banks, Mr. Paul Mwai, give us an overview of facilitating issuance, listing, and trading of capital markets securities. Mr. Kanyi, what should we expect after that?
Thank you, Bida. I think after we listen to industry players, we'll get into the sector-specific presentations where we'll have Ms. Felix Wakiyaga, the CEO of Kenya Association of Manufacturers, take us through the role of SMEs in driving economic growth and some of the challenges impeding SMEs from participating in capital markets. We'll then delve into Esther Ndeti's presentation. Esther Ndeti is the Executive Director at the EAVCA, and she'll take us through how PEs and venture caps can partner with capital markets to enhance startup and sustained SME growth in Kenya. Thereafter, we'll invite private sector, and for the presentation we've taken through by Patricia Ithao, who is the Director of MSMEs at Kenya Private Sector Alliance, and she'll take us through the role of private sector in promoting access to finance by SMEs through capital markets. Thereafter, we'll then usher in Daniel Adereti, who is the Head of Credit Risk and Compliance at Pesesha, just to look at the how SMEs can leverage on fintech and alternative finance opportunities for SMEs in the capital markets, and we'll just go through a crowdfunding case. Immediately after that, then we'll get into a discussion with Ms. Diana Gishaga from the Kenya Industry and Entrepreneurship Project, KIEP, who will take us through capital markets partnerships with Kenya Industry and Entrepreneurship Projects to improve SME performance. Immediately after that, then we can now listen to the true stories, testimonial, how he's benefited from a capital market and how capital markets has re-energized his business. Thank you, Mbide. Over to you.
Fantastic. Thank you so much for that overview. So you can actually see that we are starting at the very top. What is the capital markets? What has been the shape and form of the capital markets in this year? Hearing from the Capital Markets Authority as well as the Nairobi Securities Exchange. Then we have also been able to partner with different stakeholders. Ladies and gentlemen, I beg your pardon. That is what happens with technology. I have been rambling on and speaking to myself. I hope you can forgive me, but just remember the housekeeping rules. If anything happens on your end, log on and log back in. And if you are a speaker on this particular conversation, the most important button that you need to remember is to unmute yourself. As I was saying, we have a lot lined up for you. So we have the Capital Markets Authority and the NSE give us an overview of the capital markets and what has been happening. Then we have sector specialists speaking to us. Then we come up with a third part of this conversation, which is the panel discussion. And really, we would want to be able to hear and present your voices to this panel. We will be presenting questions to them. And Kanye and myself have actually spent a lot of time trying to ask ourselves, why are over 7 million SMEs not coming to the capital markets? What is holding them back? Is it perception? Is it the modalities? So we want to respond to this, but we don't want to be the only voices that are heard today. This is for you as an SME. Please put up your questions. Reach out to us as the Capital Markets Authority or the Nairobi Securities Exchange on Twitter, Instagram, Facebook. Put up your comments, put up your questions. We will collate this and be able to ask them to our panelists later on in the day. What do we need you to do? First and foremost, to pay attention. Second, it's never a good thing just to enjoy a good thing by yourself. We're almost getting into the Christmas season, so do spread some cheer. Ask your friends, ask your peers to be part of this conversation and to join. And over and above that, we want you to be able to engage with us, your comment, your feedback, your questions. We are listening, we are here because of you, but we have decided to start off by getting the captains of industry. Now, ladies and gentlemen, without further ado, we will start off with our introductory remarks with the Capital Markets Authority of Kenya Chairman, Mr. James Ndegwa. Mr. James Ndegwa, I'll ask you to kindly unmute your mic, put on your video, and you can give us your introductory remarks. Okay, so as we are waiting for Mr. James Ndegwa, we can get introductory remarks from the Nairobi Securities Exchange Chairman, Mr. Kiprono Kitoni. I can see you up there. I can see your video is on. Please unmute your mic and you can take the stage. Thank you so much, Mr. Kitoni.
Thank you very much, Ambide. Mr. James Ndegwa, the Chairman of the Capital Markets Authority, Wycliffe Shamia, the Chief Executive, Paul Mwai, Chairman of CASIB, Mrs. Esther Ndeti, the Executive Director of East African Venture Capital Association, Job Wanjohi, Head of Policy, Research and Advocacy at the Kenya Association of Manufacturers, Daniel Aderete, Head of Risk and Compliance, representatives of the Capital Markets Authority, representatives of the NSC, people representing the SME sector, invited guests, ladies and gentlemen. Good morning. Let me start by just saying what a wonderful honor and privilege it is to be here today to talk about a topic that I'm very passionate about. As you know, I spent 7 years at the helm of the Kenya National Chamber of Commerce and Industry before I transitioned into the Nairobi Securities Exchange in the role of chairman. So I am very familiar with a very important role that SMEs play in the economy. So it gives me great pleasure to join you today as we host the inaugural Capital Markets SME Forum. Today's forum is aimed at presenting opportunities for market-based financing for small and medium-sized enterprises in Kenya, while exploring and understanding key challenges in access to capital markets by SMEs. Ladies and gentlemen, small and medium-sized enterprises are the cornerstone of our economy, and I don't think anybody can argue about that. In fact, they provide employment to over 80% of the working population in Kenya and contribute approximately 33% of the GDP. The percentage contribution to GDP has always been an argument, as has the definition of what SMEs are. However, what's not in debate is the role that SMEs play in supporting the stability of the national economy and enabling our country to cope with related shocks resulting from periodic economic cycles. And we are in one of those periodic shocks with the COVID economy. And to underscore how important SMEs are to our economy, the data from the Kenya National Bureau of Statistics record that SMEs account for 83.6% of total employment created in the year 2019. Just imagine that figure. The unique ability to rapidly create new job opportunities, increase the tax base, as well as promote the development of a thriving private sector driven by entrepreneurship are a testament that if adequately supported, SMEs have the ability to enable our country transform into a leading economy in the region. However, we must also acknowledge that there are many challenges that SMEs are facing, not just in Kenya, also regionally and even globally. And despite the economic benefits that SMEs transfer to our economy, they continue to face critical challenges, key among them being the lack of access to initial and ongoing capital. According to the World Bank, over 40% of micro, small, and medium-scale enterprises in developing countries have unmet financial needs in excess of $5.2 trillion every year. Similarly, a research by the African Securities Exchange Association of which the NSE is a member, established that 37% of all SMEs across 15 African countries cited lack of access to finance as their major challenge. The inability of SMEs to access debt or equity capital, limited opportunities to raise long-term capital, as well as the never-ending inability to overcome borrowing constraints or create a liquidity path for shareholders has significantly accelerated the high mortality rate of SMEs, with 75% of all SMEs closing business within the first 3 years of operation. Notably, other challenges include lack of appropriate skills, and corporate governance structures have also played a key role in inhibiting the growth of SMEs. Ladies and gentlemen, I believe that the capital markets are strongly positioned to support the growth and development of SMEs in Kenya through the provision of avenues to raise capital. And at the NSE, we have placed significant focus on supporting SMEs access capital to accelerate their growth. This we have achieved through key initiatives that I'll briefly highlight, and our Chief Executive, Mr. Odundu, will give more details during his presentation. The first is the establishment of the Growth Enterprise Market Segment. We developed the Growth Enterprise Market Segment to enable small and medium-sized enterprises raise substantial capital.
Sorry, Mr. Kito.
Yes. Can you hear me?
Can you hear me?
Yes. I can hear you.
Sorry, we were checking if you can hear us.
Yes,
please
I can.
Continue. We were losing you for a second there. Please continue. Sorry about that.
All right. Okay, I was just talking about the initiatives that we have set up to support small and medium-sized enterprises. And I said that we have developed the Growth Enterprise Market Segment, or GEMS. And this market segment is aimed at enabling small and medium-sized enterprise raise substantial capital while benefiting from increased profiles. The market offers SMEs an opportunity to grow within the regulatory environment, which is very important because it's a regulated environment, and many SMEs tend to operate in a very unregulated and even untaxed environment. And this is designed specifically to meet their needs. So the establishment of the GEMS market in Kenya paved the way of the listing of small and medium-sized enterprises to the exchange. The second one, and perhaps the more exciting one, is the introduction of the NSE Ibuka program. We introduced the NSE Ibuka program as a premium incubation and acceleration program aimed at enhancing companies' growth and access to opportunities provided by capital markets. This program places special focus on supporting the growth through a well-structured process that prepares companies to list or access various capital options offered in the market in line with their strategic priorities. And I'm delighted to note that 70% of the companies in this program are SMEs, and not only last week we welcomed Metropolitan Hospitals. We have Homeboys Radio that have been in this category for the last 1 year and are now preparing for a listing on the main market, which is a real show of confidence in the success of this. And one of the things also that the Ibuka program does is that it really enhances the corporate governance structures of SMEs. And ultimately, the target of Ibuka is to make the companies ready to access capital market financing and develop structures that attract investments. In conclusion, I wish to challenge all capital market stakeholders, including ourselves, that despite the strides taken to support SMEs, there is a lot more that we can do. And I think one of the things that is being done, and I commend the organizers of this conference today, is that we need to have conversations around the SMEs, and we need to have conversations about how we can enhance their capital raising capability. There is an opportunity to minimize the cost and complexity of the listing process for SMEs. Another opportunity is for us to adequately enlighten SMEs of all the available capital raising options through the capital markets. I know for most SMEs, listing at the NSE is a long-term objective, and we need to create an aspirational economy where people actually do want to list and enable them, give them more access to capital. But with the offerings and initiatives of the NSC, we are making this goal a very viable option for all SMEs at a much earlier stage than before. For the longest while in the NSC, we've had about 60 odd companies listed, whereas the JSE in Johannesburg has 450 plus companies that are actively trading on a daily basis. It is our hope that we'll be able to really increase the pipeline of companies that list here, and especially SMEs that will scale in order for them to get better access to capital. So in conclusion, I wish we all have a fruitful deliberation today and commit to offer my support in your quest to access capital for SMEs through the capital markets. And if I don't have anything else to say later today, I would like to wish you all a very Merry Christmas, a Happy New Year, and a pleasant 2021. And above all, let us stay safe. Asanteni sana.
Thank you so much for that. That was Mr. Kiprono Kitoni, who is the NSC chairman. And I think the challenge there is we need to be aspirational, not only in our lifestyle decisions, but also in building companies that will be able to outlast us and to be able to use the capital markets as a route to unlock this particular value. Now let's get the second set of introductory remarks from the Capital Markets Authority of Kenya Chairman, Mr. James Ndegwa. Mr. James, karibu sana, kindly unmute your mic and put on your video, and we hand it over to you. Mr. James Ndegwa, if you can hear me, I would kindly request that you unmute your mic and also put on your video, and we are ready actually for your introductory remarks. Okay, so as we are waiting for the CMA chairman, we shall actually now have Mr. Geoffrey Odundo, who is the Chief Executive Officer, making his presentation for us, which is the capital raising opportunities for SMEs in the capital markets. Mr. Odundo, if you are ready, you can unmute and you can also start sharing if you have any presentations. Over to you, Mr. Odundo.
Thank you very much, Bithe, and good morning, participants. First of all is to recognize our protocols, Mr. James Ndegwa, the Chairman of the Capital Markets Authority, Mr. Kiprono Kitoni, the Chairman of the Nairobi Securities Exchange, Mr. Wycliffe Shamia, the Chief Executive of the Capital Markets Authority, Mr. Paul Mwai, the Chairman of the Kenya Association of Stockbrokers and Investment Banks, participants from the CMA, NSC, and our audience. I'm told we are about 500 plus in this forum today, and we are really, really delighted to have you all on board. I think as my chairman has spoken to this, this is a very important agenda for the NSC, and principally because, as he's highlighted, SMEs are really the core of the economic segment in Kenya. And we at the NSC have identified this as a very key imperative to really drive an agenda of capital formation and capital raising in this particular sector. And that's why in my presentation, I'll be highlighting some of the key interventions that we have put in place for the last 8 years or so to support the growth of the SME market, and also just speak to some of the opportunities and really demystify the fears that the SMEs have had for a very long time about coming to capital markets to raise funds. So allow me to share my screen. It's a brief PowerPoint presentation, not more than 5 slides, and then we'll take it from there. Right. Let's see. Sorry, I seem to have got right at the end of the slides, but I will give it a slideshow. Very good. Bithe, I want to cue with you. Can you see the slides?
Yes, I can, Mr. Odundo. Please go right ahead.
Thank you very much. So I think our chairman, Mr. Kiprono Kitoni, had really provided the context of why SMEs are a very, very important market segment. So mine is just to provide some level of emphasis as to what is really the impact of the SMEs in our economic ecosystem. So according to data that we have been able to research on, we've seen that We have about 1.56 million licensed SMEs in Kenya and about 5.85 million unlicensed. And this just speaks to the fact that we are an SME economy, and we really have to find ways of helping this sector get out and really play a major role in terms of driving growth and development of our country. It constitutes over 98% of all our businesses in our country. It employs over close to 90% or 80% of our population. So it's quite, of the employable population rather. So it's quite a key sector in our country. So I wouldn't be able to belabor more than this, that we have to really identify and really find ways of using this as a core economic driver for the country. Now, my chairman spoke about why we are seeing a lack of interest in capital raising from the market. And according to a survey done by the CMA and the Kenya National Bureau of Statistics in 2020, April, we identified key reasons why SMEs are not looking at market in really an attractive way. The major one that came out was really lack of awareness about listing processes and really the listing opportunities. In fact, we call it capital market solutions as opposed to listing, because listing sort of provides a different connotation about coming to the market. And so this is the reason why today we are holding this webinar, to really provide and demystify the sort of fears that SMEs have about coming to the market. So the file that we show here just provides an array. There's a perception that listing is expensive. There's a perception about founders being a bit fearful about losing ownership. The lack of awareness, as I said, constitutes the largest segment of this, about 32.8%. Lack of interest, and really other reasons that as part of this. Now, I think what we've seen in our economy is that a lot of businesses are debt funded, and equity funding then happens to be a very small segment. So when one starts a business, the first point of call is, of course, own capital, and then the second point of call is capital from the banking sector. However, in businesses, I think there's a very rational thinking around funding businesses through equity, and that is the reason that we play a role here. And that's really why we need to really demystify and educate the SMEs about having businesses funded both by equity and debt, and it does provide a more sustainable growth path for them. So those are the varied reasons. And the chairman spoke about the programs that we run at the exchange, the Ibuka program and our GEMS market. And these platforms are out to really help you understand that coming to the market is not a very complex process. And it's a very easy process, and you're able to access these solutions in an easier way. So that's what we'll be speaking about the whole day. And I'll really be delighted to take a number of questions or comments that you may have with regard to how to access these solutions in the market. Now, what are some of the benefits of listing? The first thing that we believe is that it provides you a level of accountability. Now, when you are able to share ownership beyond your sphere or what you call your inside orbit of family and friends, and you invite outsiders, you then have more accountability to them. Now, accountability is both to your shareholders and also to your managers and staff internally. When a business is co-owned, there is a level of expectation from various stakeholders in that organization. And that's why we believe that listing provides some high level of accountability, because it's not your own internal business or ideas that drives the business, but it's a confluence of many ideas, including outsiders, to drive the business. What we've seen, especially during annual general meetings, even shareholders who have 100 shares have an equal right to ask questions or to query issues in the company. And that helps you run your business in a level or manner that is more transparent and really in adherence to good corporate governance. Visibility, coming to the market gives you a wide audience that you can speak to. A market like the Nairobi Securities Exchange is internationally recognized. We are one of the leading exchanges in Africa. We are the largest exchange in East and Central Africa. We attract over 70% of global flow of capital into this country. So just being listed on the platform, you're able to speak to a continental audience, international audience that would not be available for you if you are, again, not a listed organization. I spoke about capital. So we have got various products. In fact, at the NSC, we have a total of 11 different products that you can actually enjoy. Key among those are shares, issuing your shares through IPOs, getting capital raising through bonds. If you are in the real estate sector, you can come and basically create what you call a real estate investment trust, where you partner with investors by giving in your property, and they get ownership in terms of units and those kind of things. We even have green bonds, and all these opportunities are available. And so access to capital becomes a natural process for you. And I must say that if you look at the capital markets today, our pension fund, or what you have in the pension fund sector alone, is close to 1.3, 1.4 trillion shillings. And this is long-term patient capital that you can access through the NSC. And so this is one area that we want to really advance a great thought process around it. Good governance supports sustainability of organizations. It helps you run your business soundly. When you're a listed company, you are required to comply with certain obligations. Things like holding normal and consistent board meetings, having your AGM, having certain audit committees and really governance committees in the organization. And so your business is more sustainable, because small as it is running well, it is running under good corporate governance. Being listed, again, helps you have what you call price discovery. Today, you really don't know the value of your organization. The value of organization possibly could be what you invested in. However, but when you are a listed company, you're valued by the market. You're given what we call a true market value, because what the market then will say is that for your company, I'm prepared to pay this much. So you get a real valuation, and this can inform decisions, for instance, whether you'd like to get investors, whether you'd like to get investors to put in more capital in an organization, whether you'd like to liquidate part of it and use that capital for something else. And that relative valuation is a very important aspect of your business. So these are some of the listing benefits, and there's still more that we can talk about, but we felt that these could be more relevant to today's meeting. How do you list? There are various forms of listing. You could do what is called an initial public offer, which is an IPO, the most common. And this is where you give out shares of your company to the public. For instance, companies like Safaricom did this in 2008. And today, they've been able to attract well over hundreds of thousands of shareholders into the company through issuing shares to the public. Very, very popular, very, very common way of doing it. The second way is by introduction. And this is where your company, you don't issue shares to the public, you just introduce your existing shares into the market. So for instance, if you're a company and you've got 25 shareholders and above, you can actually be able to list those shares into any of our platforms, be they the GEMS, AIMS, or main market, depending on the number of shareholders. And that is just putting your shares in the public. It's called what you call an introduction. We then have what you call a cross-listing. And a cross-listing is where you're able to list these shares on another stock exchange. So you issue your shares to the public, but you create, some of the shares can then be issued in another exchange. For instance, in Kenya, Nairobi, we have what you call the Bank of Kigali. They were able to create new shares and transfer those shares into our NSC. And today they are trading here as Bank of Kigali, but through a cross-listing. And then you have a reverse listing where an unlisted company is able to acquire investments in is able to acquire shares of an existing company or a listed company. And we recently had that sort of transaction happen through a big company we call Nairobi Business Ventures, which was already a listed company, but a company called Delta Holdings acquired a significant share into Nairobi business ventures. And as such, NBV is still trading, but it has now a new anchor shareholder. And so that anchor shareholder, for instance, did not necessarily have to list their company. They basically acquired a company called NBV, and that can now become their listed or the listed company instead of going through the whole rigors of a listing process. So those are the options that are available for you to come to the market. And each of these have certain requirements. And as my chairman said earlier, under our GEMS market, we've made those requirements extremely accommodative and for the SME companies. And I'll be highlighting some of those later. These are the segments that we have. We have got 4 market segments. We have got the main market. Main market, this is where companies have a net asset value of 100 million and above. They're required to have a minimum number of shares which are tradable on the stock exchange, should be a minimum of 25%, and they're required to have a share capital of 50 million. The alternative investment market segment, then net asset value of a company should be 20 million. Free float, or what the shares that are available for trade, at 20%, and the share capital of 20 million. And then the growth and enterprise market segment, which is now the segment that we are speaking for the SMEs. Again, here, there's no requirement for you to have a net asset value. You're required to have a free float, or what you call like tradable shares of 15%, and a share capital of 10 million. And then we have what you call the fixed income market segment. And here is where we have our corporate bonds, sovereign Kenyan bonds, and also green bonds and sukuks, which are Islamic bonds. So all these are available, and we really have sort of tailor-made them to identify or to make sure they fit into the different market segments that we have. Now, the growth and enterprise market segment, which is ideally the platform that we consider for the SMEs, we've created a very good incentive structure for companies to come to the market. And key among these is that the free float requirement has been reduced. As you can see, you're just required to have 15% free float. We do not require profitability track record. For all the other segments, you must have a profitability track record. Again, this one we do not have, so it makes it a lot easier for you to join in. There's a very quick turnaround in the approval process because this approval rests with the NSC, but of course there's an engagement to the CMA to get a no objection for listing. The operations are, again, as long as you can demonstrate that your business is running and able to look at that. There is actually a very key incentive of a tax amnesty on the penalties that if you have arrears of penalties of about 2 years, and that was provided last year so that to attract companies to come to the market. So you can see we've created a very, very ideal investment structure. Again, the minimum capital that you must have is 10 million, working capital of 12 months, no profitability record, at least 15% free float, and 25 shareholders. And these shareholders can be acquired over a period of time, maybe 3 months. And so that's an ideal platform for most of the companies to onboard. Now, for us also, we thought that it was important for you to understand how and create and really provide a test case of a company that came in as an SME and today is possibly the largest, second largest company in terms of its profitability, and probably the third in terms of valuation, and that is Equity Bank. And this has been a great story for our country. Equity Bank came into the market in 2006 at a listing price of 90 shillings. Over that period, in 2007, they were able to go to a high of 230 shillings, and that saw them issue a bonus of 1 for 2. So for every 1 share that you held at introduction, you were able to get a 1 for 2 that saw a small dilution of the price to 152 shillings. Then they did what you call a split. So for every share that you held, they split it 10 times. And that again made the shares more affordable and really got more shareholders on board. And the share today is trading at 34 shillings. Again, it has rallied up. And so the listing effect of Equity Bank from an initial enterprise of 900 is possibly 1,000 shillings today if you are to take all the corporate actions that have taken place, notwithstanding that this bank has provided very good dividends over the years. And so from a equity building society to what is called Equity Bank Group today, this company has totally transformed. Its current valuation is in excess of 130 billion shillings. A recent meeting with the top team is that they're looking at growing this beyond 300 billion. And that just speaks to the great benefit of coming in and listing at the NSC. So we really want to encourage SMEs and founders that really it's good to be aspirational, build your story, the market will respond to a good company, and these kind of successes are achievable. Again, look at the growth of equity. I spoke about how the shareholders' funds have grown from 94. They are now looking at a valuation of 130 billion this year, notwithstanding. The other platform that my chairman spoke about was Ibuka. And Ibuka is a platform we created in 2017 to provide companies with really a journey, a very, very experiential journey for them to really understand the market and then able to list on any of our platforms. So Ibuka is what is possibly an academy where companies come in at very, very entry level. Depending on where they are, we have two platforms, an incubator and accelerator. And when you come in, we ideally start taking you through a very, very educated process about the market, understanding all the products, looking at your structures, looking at all your points of weakness, and trying to strengthen those to be able to help you prepare and access capitals. Now, the other benefit that we provide you when you're already on our platform under the Ibuka program is automatic visibility on our platforms. So you join in and you're automatically visible to all our audience because we put you on our website, we put you on all our platforms that are visible to our investors. You get access to our media branding and media visibility, where you can sell your story. We are able to connect you to investors, even international investors, through our partnerships with other exchanges. And so you already start getting a feel of how the market is. We also help you identify what could really be your core objective as an organization. How do you align your strategies to that? We look at your strategic plan, we look at your board structure, we look at your balance sheet and help you improve all those aspects. And then all this is geared towards taking you through the accelerator and eventually into our markets segments. And so today we've got over 30 companies. One of them is about to IPO, not really IPO, but list on the stock exchange. Other companies are looking at coming into the market in a couple of years. We've got companies from very different segments, and it's open to really a wide audience. We'd also want to encourage our technology companies to look at this platform because this is a key segment that we believe is going to be the future of our country, and so it's also a good journey for you to really come and experience Ibuka and see how this takes you through a very, very consistent and sustainable phase of your growth. So I know it's a long morning, so let me wrap it there and allow the next speaker who is probably the CMA, to also share their thoughts around this, and will be part of the panel to engage with you later. Thank you very much, Mbithe and Kanyi, and also the audience. Thank you very much.
Thank you, Jeff, for that presentation. Of course, key takeaways addressing various perceptions, just demystifying some of the perceptions that some of the companies have out there about capital markets. Just looking at the benefits of listing, showcasing the products available in capital markets, various ways of listing and avenues of listing. Looking at GEMS, which is a growth enterprise market segment that is has various tax incentives to attract SMEs. And all this, what we're trying to do is to unlock value for these companies using the capital markets on the exchange. A very nice story there on the equity journey that should showcase that you can start somewhere and 10 years later, then you can actually see the value in terms of growth. And now allow me now to introduce the next speaker. The next speaker will be the chairman of the Capital Markets Authority, Mr. James Ndegwa, who will take us through his opening remarks. Chairman, we were a bit ahead of our time, but nevertheless, we're always happy to get your blessings before we start the meeting. Thank you. Welcome, Chair.
Okay, thank you. And my apologies for missing the start. So I don't know whether they're opening remarks or middle remarks, but I think since remarks were prepared, allow me to deliver them. So Chairman NSC, Mr. Kiprono Kitonyi, I can see the CEO NSC, Jeff Odundo. We have our CMA Chief Executive, Wycliffe Shamir, and all other participants. Good morning and greetings. I hope everyone is well. I think in this new normal, we have this opportunity to participate virtually, and much as I think, of course, we would enjoy interacting physically and exchanging views, I think this new normal has allowed for multitasking. So I've excused myself from a board meeting to come and join this, and I'll be able to switch back to the board meeting shortly thereafter. I think it also gives us a wonderful chance to have a very wide participation. I've seen on the chat, we have participants from New York, from Atlanta, and I guess from many other parts across the world. So allow me now to make these opening remarks, with apologies that they are not coming at the opening, but I hope some of them might be useful. I've also seen Jeff showing some up-to-date statistics. So if mine are not as quite up to date, please excuse me. So here I go. So I'm delighted to be part of the National Capital Markets SME webinar today. We certainly can't allow the COVID-19 pandemic to dampen the Christmas spirit, but of course we must remain careful. And therefore I thank all of you for finding the time during this festive season to participate in this important event, and on the eve of a very special day, of course, in Kenya's calendar, Jamhuri Day. Ladies and gentlemen, Vision 2030, which is Kenya's long-term development blueprint, recognizes the vital role of small and medium enterprises in transforming Kenya into a newly industrializing, high middle income country. The government's third medium-term plan, 2018-2023, has particularly highlighted micro, small, and medium enterprises as a key focus area, amongst others, in realizing the country's aspirations of becoming a middle-income economy. The critical contribution of MSMEs into Kenya's economy also continues to be highlighted in many authoritative research and policy documents. I am informed that there are about 7.4 million MSMEs in Kenya, with only about 1.5 million of these being licensed entities. And that SMEs, particularly in the informal sector, account for about 84% of all employment creation. As I say, I'm sure some of the speakers today will have more up-to-date figures on the contribution of this sector to Kenya's GDP, tax revenue, employment, how many are formally licensed, and so on. What I would like to emphasize is that even before the advent of COVID-19, the government had taken very significant measures to support this sector in terms of improving the enabling environment. We've also seen significant involvement by players in the private equity space, as well as the banking sector in supporting this, as well as the banking industry in supporting the sector with innovations such as the Stawi solution. Individual banks have also allocated lending facilities, particularly to MSMEs, complemented by a number of fintechs, providing digital lending facilities. However, now well into the pandemic period, many countries across the globe introduced policies that were aimed at further protecting and cushioning this sector, including renegotiation of banking facilities, fast-tracking the implementation of credit guarantee schemes, tax reductions and waivers, improved logistics handling, that's what we've seen our president doing the other day, prudential easing, for instance, the suspension of Credit Reference Bureau reporting, as well as fee and levy waivers, issuance of special corporate and sovereign debt issuances, amongst many others. This sector has also been continuously supported by the development of skills and explicit linkages to domestic and external opportunities. Now, I think as Jeff, as I could see during his presentation, has illustrated, this sector requires a mix of money market and capital market interventions, which emphasizes the complementary role of these two subsectors of the financial markets. While the banking sector can address short-term, usually working capital requirements, the capital markets can and does provide longer-term capital to support long-term expansion of the businesses. So I believe today's event is part of these wide efforts since the launch of the Capital Markets Master Plan 2014-2023 to advocate the greater use of market-based financing by SMEs. Indeed, the master plan projected that there would be 3 or 4 listings of SMEs on the NSE's growth enterprise, the GEM segment, basically, every year for the next 10 years, translating to 40 listings by 2023. Unfortunately, for various circumstances, I understand we have only achieved 6 listings so far. Elsewhere in the world, MSMEs have significantly tapped into the capital markets. I understand that the Chinese Shenzhen Stock Exchange Chinex market segment, introduced in October 2009, with then 28 listings, had a total of 878 listings as at November 2020, with MSMEs from manufacturing industry and IT valued at approximately $1.4 trillion US. And I think we have this potential also here in Kenya. Ladies and gentlemen, the financing and capital raising challenges faced by SMEs in Kenya is fairly well documented. A survey by the International Trade Center themed Promoting SME Competitiveness in Kenya lays out cases where 33% of the firms that needed financing did not get it. Surveyed companies indicated reasons ranging from high interest rates, collateral requirements, or complex application procedures to outright rejection of their applications. Given that commercial banks in Kenya already derive a substantial portion of their portfolio and revenues from SMEs and SME-focused financial products, new approaches are needed to broaden and deepen financial inclusion among the smaller Kenyan companies. The Capital Markets Authority is committed to working with SME industry stakeholders and the government to ensure that an appropriate business environment, as well as capital raising avenues, are instituted through the capital markets. We also see the highly successful capital markets regulatory sandbox as a key pipeline for market-based finance for new transformative business models, such as M-Pesa was, or has proven to be. We also foresee startups benefiting from the debt and equity crowdfunding regulations that the authority is on course to issue in this financial year. Further, in line with the need to support governance by issuers of securities to the capital markets, while acknowledging that some of the current provisions of corporate governance might be impractical and inhibitive for smaller cap businesses, the board at the CMA has recently approved a policy framework paving the way for the development of a tailor-made corporate governance code and financial reporting framework. Finally, ladies and gentlemen, in the same vein, as we work towards promoting the capital markets as an avenue for SME capital raising, we at the Capital Markets Authority are open and keen to understand any key challenges, impediments faced in accessing and using the capital markets. We welcome your proposals and suggestions as SMEs, either collectively or through individually, on how to resolve those challenges, and we'll do our utmost to address these. In conclusion, please allow me to reiterate the Authority Board's support and commitment to ensuring that a facilitative environment is put in place for MSMEs in the capital markets as part of our obligations and commitment to realizing the Big Four agenda and the medium-term Plan 3, deepening and broadening the local capital markets, as well as positioning Nairobi as an investment destination of choice. I wish you fruitful discussions, happy Jamhuri Day, a Merry Christmas in advance, and let's hope 2021 will be a truly happy, prosperous year. Stay well, stay safe. Thank you very much indeed.
Thank you very much, Bwana James Ndegwa, for those remarks. Of course, reiterating the board's commitment to supporting the SMEs. I'm sure your remarks will help us set the stage for good and elicit good discussions throughout the day, and thank you for that. I'd like to invite the next person to come on to and present their remarks. That is the CMA Chief Executive, Bwana Wycliffe Shamia. Mr. Wycliffe Shamia, you can unmute your mic and also your camera.
Thank you, Kanyi. I notice I can't unmute my camera. I think something can be done from where you are.
Okay.
But I will make very brief remarks given the earlier presentations.
As
so
we're
that we
waiting for
don't.
Mr. Shamia, Kanye, isn't it very exciting to see the journey that Equity has taken, and just to also get the commentary from the chairman of the Capital Markets Authority? I mean, an SME that started at 90 shillings in 2006 and now is valued at 1,000 shillings per share. Kanye, wouldn't you want to start a company or be part of a group of companies that is able to do that?
Of course, it's a fantastic journey, and I think most of the SMEs who are listening to us today can relate to that journey. It has to start somewhere, and for you to realize that value, you have to be patient. That's why capital markets is about long-term capital, patient capital that helps you unlock your opportunities. So I hope, Mr. Shamia, now you can unmute your mic and also your camera. Thank you. We can see you. Carry on.
Okay. I seem to be having a challenge with the camera.
We are okay now. We can see you in Mombasa.
Yeah. Thank you very much, Kanyi. Chairman CMA, Mr. James Ndegwa, Chairman Nairobi Securities Exchange, Kiprono Kitoni, NSC CEO, Mr. Geoffrey Odundo, CASIP Chairman, Mr. Paul Mwai, KEPSA CEO, Mrs. Carol Kariuki, CAM CEO, Ms. Felix Wakiyaga, all CEOs present, managing directors, all protocols observed, my colleagues at CMA, NSC, invited guests, good morning. I would avoid repeating what has been already presented by the first three speakers, but I want to focus around the area of when we speak about capital markets, then what do we mean? I think sometimes we have that assumption of people understanding and of course taking on capital markets as we know them. First, as the earlier speakers have already mentioned, capital markets are where you find long-term funds. Short-term funds, I think we are very clear you can get those from the banking sector, microfinance, and other parties. These funds will be for a short term. But when you are doing projects which require long-term funds, then of course, capital markets are there for you. Now, in the process of trying to raise the money in the capital markets, we speak about contracts which we call securities. Securities are what we see daily, and I think what is more common to us would be shares, as we know. Shares will be in any corporate, but of course we know shares which are listed at NSE to be a good example. Now the issue is, what is a share? A share is just a unit of ownership. So if you have your small company, I think we are saying the unit that people own within the company then will be called a share. Now, when we talk about share, in our capital markets, of course, language, we call this equity. This is owners' funds in the company. But there is also the options of you using what we call debt securities. This is borrowed funds. And of course, in this case, you sign certain contracts where you get money from certain parties with a promise to pay at a future date with some kind of interest, just in appreciation of the value the funds gave to you. Now, that is what we will call capital markets in brief. But then the question is, in our local space, who do you find within the capital markets? First, you hear of Capital Markets Authority. We are a government agency who regulate capital markets in Kenya. We license players. We also give approvals to those who want to issue what I call securities in the beginning. For example, Odundo spoke about IPOs. We call this initial public offerings. I know we have seen some. Of course, the most common one and familiar is Safaricom. Now, when you want to do an IPO, as we call them, you will make an application to us. We have specific requirements which you need to meet. And of course, we assess you against those requirements. We do license and approve. Within the capital market space too, we have a market which we call an exchange. An exchange, for example, is the Nairobi Securities Exchange. For now, we have one exchange. And of course, there will be many types of exchanges. There will be the normal organized exchange, as we know, Nairobi Securities Exchange, but we also have certain platforms where private companies and players can exchange what I call securities, which we call over-the-counter market. And of course, we'll be seeing quite a number of these platforms as we go forward, because it is important for us to create a simple entry and exit when you get into these securities. Then again, you require a depository. Now, for our case, we have two depositories. We have the Central Depository and Settlement Corporation, as we know it, CDSC. They normally give us the registry services. When you have securities where these securities are kept safely, of course, I know we got away from the physical certificates. So electronic form kind of ownerships will sit in a depository, and CDSC plays for private companies, while our Central Bank of Kenya represents those securities which are issued by the government of Kenya. Now, there are specific functions on mediation within the industry. You will then find players like investment banks who help you to trade in your securities. They also assist you structure specific securities when you want to raise capital. We have stockbrokers who help investors transfer their securities in whichever form, whether they are buying or selling. And of course, there are certain services like portfolio management, fund management. So we have fund managers who do that role for us. In addition, then we, of course, have provision for services for people just to advise investors who are getting into these securities. And therefore, we have a class we call investment advisor. So quite a number of players. And of course, within the space, you will also find collective investment schemes, which are usually vehicles allowing investors, especially retailers, to come together, pull up funds, and of course, participate in ownership of certain securities or properties or portfolios. It is important for you to know that as SMEs, as you think about raising funds, you need to know the parties which will assist you. For example, we have said you can raise funds. You can raise funds publicly. You can raise funds from private placements where you talking to private persons and then of course agreeing on how they lend or how they give you funds. But then there are parties who must assist you in doing this. And these are parties we call transaction advisors. They may be investment banks. They may be other professionals like lawyers, accountants, who will help you in structuring whatever instruments you want to issue. I speak to this because I think this is very important as we look at how can we assist SMEs raise funds, because they will require to issue securities at some point. Now, I think the earlier speakers have spoken about how have we interacted with SMEs. And Odundo spoke about our James market. Unfortunately, I think as it was mentioned from the beginning, we haven't had very positive, maybe, introductions of SMEs within that space. And therefore, the question has been, what are some of the hindrances that we need to address so that SMEs can benefit from what we have within the capital markets? I want just to finish by saying, because of the so many other interactions we have had with the SMEs, currently we are working on a legal framework to allow SMEs raise funds within the capital markets. And therefore, it will be very important as SMEs to interact with those who are working on this assignment so that we can incorporate most of the views which you have. We are looking at how you raise funds. And of course, again, on the other side, how do we work on corporate governance structures which then are more appropriate to SMEs? Because I think from the past, it has come out very clearly. This is an area which is of concern, especially to SMEs. Going forward, we hope to interact more, to create a bit of awareness so that those opportunities are known to you, and also to see how to create local capacity so that you can raise funds within the capital markets. I'm thinking, without repeating what the other speakers have spoken already about, I want to end my remarks at that, and then of course, wish all of us a good discussion today, hoping that it is a beginning to a very solid work. We will work with you as you look at so many of your other options in terms of funding. Thank you very much.
Thank you very much, Mr. Wycliffe Shamir. He is the Chief Executive of the Capital Markets Authority. And he's made a very good presentation saying that it is the time now for the SMEs, and corporate governance is certainly pertinent to this conversation. I think getting into the public realm must and absolutely has to be the next step if we want to change the narrative when it comes to the SMEs and move them from being small and getting into the large enterprise kind of space. Next up, we have Mr. Paul Mwai, who is the chairman of the Kenya Association of Stockbrokers and Investment Banks. Today, he will be talking to us about facilitating issuance, listing, and trading of capital market securities. Mr. Mwai, your presentation is up. I'd ask you to kindly unmute your mic, put on your video, and you can start us off. Over to you, Mr. Mwai. Paul, if you are there, I'd ask you to kindly unmute your mic.
Yes, I'm there. Thank you very much, be there for that introduction, and thank you to for this opportunity to discuss the opportunities for the SME market with regard to the capital markets and how we can collaborate with other industry stakeholders to be able to enhance the participation of the very important part of our economy, the SME sector, in the capital markets. I'd like first to congratulate the Capital Markets Authority and the Nairobi Securities Exchange for organizing this webinar. I think this is a first and a very important webinar. We are hoping that this will not be the last, and that perhaps we should make this a biannual or an annual event, so that we all have an opportunity to interact with various industry players and to discuss how we can enhance this particular opportunity for the SME sector. So the Nairobi Securities Exchange has suffered. My discussion today centers around facilitating issuance, listing, and trading of shares in the capital markets. And as you all know, that the Nairobi Securities Exchange has suffered a long drought of listings, and we've had almost 12 or 10 years or so where we haven't had a new listing or significant listing coming into the market, and particularly on the GEMS market. I think the other previous speakers have emphasized how the participation has not perhaps met up to our expectation. And perhaps the discussion I'm going to carry today is probably to address what we need to do to look at solutions that can make this turnaround. So if we could move on to the next slide. I think to be very honest, it is a big challenge. With it's not a quick fix. It is something that all stakeholders need to come together to address, and the solutions will be found in collaboration between various sectors. I'm particularly excited that today we have with us the Kenya Association of Manufacturers as panelists. We also have the Kenya Private Sector and Kenya Private Equity and Venture Capital Association in place, because these are the stakeholders that we need to collaborate to ensure that we are able to achieve that. Thank you. So the key thing, and I think Jeff emphasized this, is that there seems to be a significant lack of knowledge among, particularly the SME sector, as to the benefits of listing and why they should list. And I think Jeff has emphasized that lack of knowledge is perhaps the number one reason why we haven't had the level of listings that we would envisage. And we are looking to continue to collaborate with various stakeholders to enhance knowledge on this. I think this particular seminar is one step towards that, and that's why we are particularly very encouraged in terms of bringing this to the market. So there is need for wide range consultation, wide range marketing campaigns reaching out to all the SMEs wherever they may be in different parts of Kenya, to educate them, to inform them, and to ensure that we can come to market and raise capital through the Capital Markets Authority. The second point, our association has been very active in lobbying the government and the Capital Markets Authority in terms of enhancing the incentives that have been there to enable people to come and list in the market. And we are very thankful to government, particularly, every time in the budget we are hearing the emphasis on GEMS and the SME sector for the incentives that they've done this far. The concern then is why aren't SMEs using these incentives that are already in place? And effectively what we then need to do is to carry on that conversation and take it to the SME and ask them, what are the incentives do we require to be able to achieve this? And I think this is important because, when we look at what we are trying to achieve here is we are trying to mobilize Kenyan savings to be able to be deployed to Kenyan companies to enhance their growth potential and to be able to exploit the opportunities that are there in our market. And if we are able to do that, the multiplier effect of Kenyan savings going into Kenyan companies to build Kenyan investment, then the growth or the resulting impact in terms of our economy and the growth in the economy will be tremendous. Going back to Vision 2030's financial objectives, one of the key objectives was to increase Kenya's savings investment rate from 17% to 30%. Now, I think the latest figures show that has probably reduced to about 14%. So we still have a long way to go. Now, to be able to do that, and I think creating these opportunities for funds or savings of Kenyans, we must create the demand side for these savings, and we must create products, and we must create avenues which can channel these products to that. And that's why it's important to continue to interrogate what is it that is required for us to be able to achieve that transfer of Kenyan savings to Kenyan investments to enhance. And this is particularly important because in a global world where people are open to invest anywhere in the world, we get to a point where people are investing in Bitcoins, in other things, which perhaps don't necessarily enhance the growth in our Kenyan economy. So we must make Kenya an attractive investment destination for our Kenyan public. So moving on to the next point, I think we continue to explore the various options that we need to do. What are the hindrances that people look at, in terms of the class of shares that we want? What are the opportunities? So one of the biggest fears that investors have is the loss of control when they come to listing, and whether we can be able to be creative in terms of creating shares that would enable investors to maintain control even as they come to market. So moving on, I think Jeff has already touched on the Ibuka program. I think this is one of the initiatives which the Kenya Association of Stockbrokers and Investment Bank in collaboration with NSE has introduced that we hope will enhance these opportunities. And first of all, let me allow me to laud the more than 30 small and medium-term enterprises that have already enrolled on this program. It is effectively allowing them an opportunity to be guided through to the point of listing. Regardless of where you are, at the point when you say, I'm interested in listing, I would like to explore this opportunity, you can get onto the Ibuka program, and you have very experienced consultants who will hold you through this particular program and make and remove the pain and the discomfort or the lack of knowledge that might be there, so that it makes it a lot easier. So we would like to at this point make an appeal to all those SMEs out there who are perhaps thinking of listing to please explore this IBUCA program and to look to enroll into this program so that we can be able to work together to build this up. Thank you. Another challenge that we have seen, and I think this is something that we always continue, investors have always given and told us that the cost of listing, the time it takes to list is too long, and sometimes investors look to, they want, when an investor says, I need funding, I need it in the next 3 to 6 months, otherwise I'll have lost the opportunity. But as much as we would like to emphasize on the regulatory authorities to help us reduce the time to listing and the cost of listings, but we also want to step back and also look at the SMEs and tell them that perhaps this also needs to be that you need to think forward and plan around your capital structure, so that you can foresee where you are going to be in the next 3 to 4 years. And you can have that conversation early enough so that you can say that I will need this kind of capital structure in terms of debt equity, my gearing, and I'll need to be able to manage that to ensure that I'm achieving. And therefore, you can start the conversation early and therefore be able to manage that process in a way that you can be able to one, save the costs, but also reduce the time and be able to achieve the same thing in a more practical way. Thank you. And the other point I'd like to emphasize on is that we are alive to the fact that as the capital markets, we are competing with other sources of or partakers of capital, and particularly the banking sector, which is always looking for deposits, the private sector, whatever. But I think the emphasis again comes to the point of, particularly with the banking sector, I think we need to look at the complementarity, because what you will find, and I've had these conversations with a lot of SME people, is that whenever you open the conversation about listing, you will find that banks, most investors in the SME sector continue plowing back their profits just to be able to show up their share capital and to be able to, so that they create room for additional borrowing from the banks. And a lot of SME players would tell me that, I've been investing in this company for the last 15 years. I've never really gotten anything for myself, principally because I've been plowing back all profits to the growth story. By listing, you are then able to give yourself room to hopefully reap some of that benefit and show up your share capital without necessarily plowing back your profit. And I think this is a conversation that needs to go on and be explored, so that at least at certain points you're able then to create room for additional capital, for additional different types of borrowing. In terms of the private sector, the private equity players, one of the things that has come forward is that, one of the things that we really need to consider is that we have a lot of requirements. That we have requirements where, when investors sell shares into the market, they have a lock-in period where they have to stay in their share. While that regulation is very important in terms of ensuring that people don't just come and sell their shares and take off to other investments, that they still have skin in the game and they are still participating in even having sold the shares and are still driving profitability in that company. For this particular category of investors called the private sector investors, they have private equity investors, they have a limited investment horizon. So their investment horizon is maybe 5 to 7 years, after which they have to get out completely. So, if you impose handcuffs on that particular investor category, you will just simply chase away them from the option of listing. And therefore, we probably need to start that conversation in regard that how do we relax this particular requirement for these particular investors so that we can they can complement each other. So once they invest in the company or in the SME after the 7 year after the exit, the most natural exit option should be by a listing in the Nairobi Securities Exchange. And therefore, we also then need to also interrogate what are the incentives do these private sector, private equity investors need to be able to come and list in the Nairobi Securities Exchange. We've seen, this is somewhat a new industry, perhaps starting in the 90s. And while it has grown, we've seen that grow and listings drop. So we need to be to have that conversation where we are both growing and we are not having perhaps private equity investors investing and at the end of their 7 year period, selling on to another private equity investor and to another private equity investor. And therefore, we must find a way of ensuring that we unlock this and enable people to invest in, to share the investment by marshalling the investment towards Kenya. My final point, I'd just like to emphasize the importance and I'd like to perhaps laud the Capital Markets Authority and the NSC for the active point, for the active role they have played in terms of enhancing the product offerings that we have. We've seen the REITs market, although it's off to a slow start, we are seeing that is now gaining momentum. I think everything starts slow and we also need to be patient with these new products that we are developing, and we need to give them time to grow. And I'm confident that some of these will continue to grow and develop. We've seen the asset-backed security market, we've seen securities lending and borrowing. We need to cast our net wider and be innovative in terms of what products we are bringing to be able to give opportunity for investors to invest in a wide variety of opportunities, so to say. And my final point, I think if you could move forward, I do believe it should be the final one, is that we also need to create the demand side. So if the SMEs come back, who's going to buy these SME companies when they come to the market? And we want to, the Capital Markets Authority, the NSC, together with the stockbrokers and investment banks, have effectively done a tremendous job of deploying fintech to be able to allow Kenyans to access the stock market. And today we have solutions that enable Kenyans from any part of the country and even from the diaspora to be able to remotely access the stock market and invest. And I think the next step now we need to explore is to look at, hopefully, that the next time we are having an IPO, we will have an online IPO or a mobile-based IPO, so that we are able then to enable people, allow the application of technology to democratize the access into the capital markets. And I think this will be a key point to driving demand, to enhancing that savings rate of Kenyans, enabling them to buy Kenyan companies and enabling them to participate in the growth of our economy. And finally, I'd like to close by making a clarion call. First of all, to government, that we are partners in this. We need to grow that savings rate of Kenyans, which is a critical part of enhancing economic growth. I'd like to also appeal to the associations, but here today, the Kenya Association of Manufacturers, the Kenya Private Equity and Venture Capital Association, and many other organizations that represent entrepreneurs, that we need to work together to enhance the capital markets participation and to give Kenyans the opportunity to invest in Kenyan companies. And my final call would be to all those SMEs out there who haven't interrogated comprehensively the option of listing in the Nairobi Securities Exchange, to get in touch with one of our members. We have a Kenya Association of Stockbrokers website. They were also available on the Nairobi Securities Exchange website, and just sit down and have that conversation and explore the possibility of raising capital through the capital markets exhaustively, so that at least as you go about your business, you know that you have exhaustively explored that opportunity, and hopefully that will lead to a growth where we will all be beneficiaries and we will enhance the growth in our economy. With that, I'd say thank you very much for this opportunity, and we look forward to a very fruitful and informative webinar today. And thanks once again to the NSE and the CMA for organizing this conference. Thank you.
Thank you very much, Mr. Moy. That was Paul Moy, who is the chairman of the Kenya Association of the Stock Brokerage and Investment Banks in Kenya. And the clarion call here is really we must all work together. But Paul does also present the opportunity for not only raising savings in the Kenyan economy, but also deploying them in investable opportunities in Kenya. That is the opportunity set that the capital markets portends for us. And whereas there could be attractive opportunities out there, we have had alternative assets such as Bitcoin and also capital flight into US equities, yes, it does give a return. But the question is, if we don't actually invest in our own community, in our own businesses, then where will the growth come from? So it's all a joint effort, whether it is you watching, whether you are a lady, a gentleman, a business owner, an investor, put money aside, let's build the Kenyan businesses, and let's be able to say that we have actually aspired and grown in each and every single step that we are doing. We are continuing with our session today, which is the National Capital Markets SME Forum 2020, brought to us courtesy of the Capital Markets Authority and the Nairobi Securities Exchange. This session today is in 3 parts. We've just come to the tail end of the first part, where we had presentations from the Capital Market Authority, the Nairobi Securities Exchange, and CASIP. And now I want just to go back and forth with Mr. Kanye, my co-moderator, just to see what was his takeout. What is he going to do? What is he going to be telling everybody that he meets over the next couple of weeks, especially as we get into the Christmas season, in terms of the takeout? After that, we will now get into the next segment, which is the SME sector-specific presentations. 6 presentations, 6 captains of industry. You cannot afford to miss this. Remember, we are here because of you. Our chat is open. It's been very vibrant, but it's not too late for you. Put out anything you want there. We have our representatives from the Capital Markets Authority and the Nairobi Securities Exchange ready and willing to answer all your questions. If you are following us on the media platforms, you can view this particular event live on Facebook or on YouTube, and you can be able to engage with us via your comments, your questions, or anything that you would like to know in as far as accessing the capital markets to raise capital for the SMEs. David, what is your synopsis of the first part of this forum today?
Thank you, Mbide. And I think a lot of learning there, the first part of our presentations. And I think what is coming out as key learning outcomes is that SMEs are a backbone of a resilient national economy in every country due to their nature of stimulating domestic demand through job creation, innovation, and competition. But of course, SMEs involved in the global supply chain have, of course, the potential to encourage international trade and mobilize domestic demand. And this then speaks to prioritizing SME development, and which is therefore very critical for promoting inclusive economic growth in Kenya and world over. Now, given the global economic uncertainty, which has been mentioned by the panelists, then adequate and stable access to finance is critical for SMEs to survive and grow. You know, there's a perceived supply-demand gap in SME finance, given that stringent requirements, these requirements for collateral, there are stringent requirements when it comes to regulatory requirements for, a listing. And I think these are some of the things that we'll try and unbundle as we, have those conversations one-on-one with the SMEs that, are interested in accessing market-based finance. If you look at the G20, it has actually identified long-term financing for investments, including SMEs, as a key to sustainable growth and job creation. So these conversations are very timely, and we think the importance of SMEs in promoting GDP growth and employment over time has been underlined, even in the Vision 2030 blueprint, economic blueprint document, and the Big Four agenda, specifically if you look at manufacturing, housing, and these are areas where SMEs can benefit and also contribute to economic development. Over to you, Mbide.
Thank you so much for that, Kanye. It's an interesting time. Because of COVID-19, we have to maintain our social distancing. So we are using a technological platform, and I think you could see us trying to glance at one another. So it is a new norm. But what I liked from the presentations in our introductory segment was this. Each and every single captain of industry said, this is where we're at, and we need to move forward. Mr. Moy said that he envisions a time when we'll be able to actually invest in an IPO through the mobile phone. So there is an opportunity for us to then leverage on technology to be able to see what is happening. David, I like the statistics that you have shared in terms of what is happening globally and what is happening locally. So today, if we have the SME sector contributing to GDP, contributing to the material employment opportunities, whether informal or formal, then the next question is, if we have 61 opportunities listed on the Nairobi Securities Exchange, whereas we have over 7 million SMEs, at what point do we then begin to get to 7,000 of these SMEs finding their way of raising capital here? And over and above that, David, I think some of the nuances that SMEs face in terms of, should I relinquish ownership? What will happen? Is there transparency? How should I deal with corporate governance? All of this have been touched on by our different captains of industry. But what is my critical takeout from the first segment of today is, first and foremost, we must aspire to a new way of being in terms of growing our SMEs to move from subsistence and moving into larger businesses, which is what Mr. Kiprono Kitoni was alluding to, and he is the chairman of the Nairobi Securities Exchange. Mr. James Ndegwa told us that we should also aspire for a prosperous 2021, but we cannot forget the impact of the SMEs in the sector. Mr. Wycliffe Shamir has told us that corporate governance is pertinent and the Capital Markets Authority is cognizant of that element, and the fact that this corporate governance needs to look slightly different for SMEs to ensure that there is transparency, and when investors put their money in, there is transparency in terms of how it is allocated and the accountability when it comes to financial resources. Mr. Geoffrey Odundo, the Chief Executive Officer of the Nairobi Securities Exchange, gave us a very good example of equity as a case study. A company that started as a building society, 2006, it came and listed by introduction on the NSE at 90 shillings per share. 2020, it's now valued at almost 1,000 shillings per share. That is the kind of growth that we want to see spotted in the SME sector in Kenya. And last but not least, Mr. Paul Mwai has talked to us about the element of looking for investment opportunities in our own country and building this if we're going to move Kenya from where we are to the next place. And really, it's for our benefit and building wealth for future generations. I think that's an interesting sum up of the first part of today. But now we have the second part of today. What should we be looking out for, Mr. Khan?
Thank you, Mbide, for that. I think the stage has been set. We are now getting to the next phase where we listen to SME sector-specific issues that we are now going to deal with so that we can be able to bridge that gap that has been mentioned earlier by the earlier presenters. And it's only right for us to listen to these presenters so that we are able to appreciate what SMEs look out for, what are their challenges specifically, and how we can actually provide the solutions through solutions from capital markets. And with that, I'd like to invite our next presenter. And our next presenter is Ms. Felix Wakiyaga, who is the Chief Executive Officer, Kenya Association of Manufacturers. She's going to take us through the role of SMEs in driving economic growth and challenges impeding SMEs participating in the capital markets. Ms. Wakiyaga, I think I can see you're on. You can unmute your mic and share your presentation.
Thank you very much. Can you share it from your end?
Okay.
Yes, please.
So as we wait for, thank you. I think that it's coming up on screen. There it is.
Thank you very much, Kanye. Thank you very much, Bive, for the good moderation of this session. Good morning, everyone. It's a great pleasure to join you today as we discuss the opportunities for SMEs in the capital markets and also the hindrances to their participation in the same. Allow me to begin by acknowledging the presence of the Capital Markets Authority Chair, Mr. James Ndegwa, the CEO of CMA also, the Nairobi Securities Exchange Chair, the Chair of the Kenya Association of Stockbrokers and Investment Banks, all the fellow speakers that are joining today, distinguished guests, ladies and gentlemen, good morning again. We can move to the next slide. Thank you very much. I'm representing the Kenya Association of Manufacturers, so just a little bit about us. We are a business membership organization established in East Africa in 1959. So we are 61 years this year. We have 7 regional chapters around the country and 14 sectors that represent different parts of the manufacturing economy in Kenya. Our vision as an association is to promote competitive and sustainable local manufacturing. And our mission is to be a world-class business membership organization that effectively delivers services to its members. We can move to the next slide. Thank you so much. So I'll start about the role of SMEs in driving economic development. SMEs, as we know, are a huge engine for growth, and they employ about 80% of the workforce in Kenya. This is from the Kenya National Bureau of Statistics survey carried out in 2016 on SMEs. They also play a unique and active and crucial role in innovation, technological advances, and improving high-tech information networks. SMEs also cut across all the sectors of the economy, from manufacturing, hospitality, agriculture, retail, and others. And for that reason, SMEs play a very important role in employment creation and income generation in the country, and they are really the bedrock for industrializing the country now and in the future. The role of SMEs in the country is indicative that it's time and it's right for them to really work to create a conducive space so that they become productive and profitable at both the local and the regional levels. So the importance of SMEs, I think, cannot be underestimated, and the speakers who've spoken before me have also emphasized on the same. But despite their relevance, they do face a number of challenges, and their contribution is not maximized because some of the challenges that they face, many of them specialize also in low value addition. Essentially, many small businesses are part of a huge informal economy, which may seem to offer relief for their short-term challenges, but in the long term, it actually minimizes their potential for growth. It also minimizes their access to a wider resource and markets, and ultimately limits their socioeconomic impact. So some of the challenges they face are outlined in the slide, and I'll go through each of them. One of them is product development. So quality product development coupled with the right pricing and exploiting economies of scale, and also increase marginal revenues for various products. However, Kenya's level of product development has been low, resulting in high production costs and limited market share. This causes manufacturers to lack a competitive edge compared to their peers. In fact, a low level of product development and innovation has allowed imported products to take over a large market share. Another challenge faced by SMEs is market linkages. SMEs are disproportionately affected by trade barriers and inefficiencies resulting from trade policies. These include issues on standards, technical regulations, logistic processes and services, and customs and other administrative procedures. These hinder the SMEs from accessing both the local and international markets. And other hindrances include the high infrastructure costs, the low productivity, and we are trying to remedy this as CAM and have different partners, especially from the e-commerce world, to try and give SMEs additional platforms for market access at the Association of Manufacturers. The next challenge is around financial linkages. A lot of SMEs don't have adequate access to credit. This is because financial institutions require collateral in order to give them funds to expand their businesses, and a majority of them lack this. And there is need for financial service providers and other agencies to develop appropriate financial products to create financial linkages for SMEs. We welcome the government move to set up the credit guarantee scheme for SMEs in the country. However, we definitely think that the amount needs to be increased. We've also not seen the robust uptake by SMEs of the GEMS market segment, and I think that's why we are having this discussion today to see how we can increase the uptake of SMEs. We attest that the GEMS act as a safe exit route for private equity, venture capital entities, and family businesses, and also offer wide opportunities to access public listing to more entities with relaxed regulations. And we will continue to interest manufacturing SMEs into this segment, working together with the CMA. Another challenge is the raw material supply and management. Manufacturing SMEs especially often face challenges in accessing raw materials. For example, some of the raw materials are seasonal, such as the food items and other agricultural products. And for a concerted effort, the necessary infrastructure to facilitate raw material sourcing, bulking, collection, and storage. And this can be done through establishment of cold storage, ensuring that there is timely transportation, also upgrading our road infrastructure, amongst others. The next challenge is around quality standards and certification. SMEs in manufacturing face challenges in quality standards and certification, which in turn affects their ability to access markets. And for that reason, we are continuously engaging as an association with the Kenya Bureau of Standards and other regulatory agencies to address the standardization challenges that SMEs face. Then the other area is around policy, regulatory, and business environment. And manufacturing SMEs, like other businesses, continue to face challenges caused by policy instability and unpredictability, where there are changes in policy. For example, every year during the budget speech and the Finance Act, there are changes in the tax policy. One of the examples is beginning January 2021, government is introducing a minimum tax on gross turnover, and this will greatly impact SMEs. And we urge government to really consider creating policies that encourage investment within the sectors and support SME growth and improve their competitiveness. The other challenge faced is around technical expertise. There's definitely the shortage of skills relevant for local manufacturers, and the unavailability of specialized technical training also contributes to lower productivity and impacts on the output of SMEs. On our end, we are trying to do our part to improve the technical skills within the market, and we have partnered with GIZ to run a TVET program to empower young people through skills and entrepreneurship development. And we also have an SME hub to support and empower SMEs. So my next slide will be about the challenges impeding SME participation in the capital markets. The first one is that small and medium enterprises seldom raise funds in the capital markets, which mainly attract fairly large corporations. Some of the reasons they don't list include the costly listing requirements, the absence of investor demand, and also financial illiteracy, information asymmetry, and lack of collateral. Some of the reasons that we have picked as why they don't list. And I believe a forum like this today will really open up and deal with some of the challenges and address the same. The capital market can attract smaller firms by reducing the fees, offering less stringent listing and disclosure requirements, and also appointing advisors that help firms navigate the listing process, amongst others. One region that has been placed particular emphasis in the development of SME markets has been East Asia. If you look at East Asia, that is one of the examples we can look at. Since the Asian financial crisis, several economies have established new SME markets or reformed existing ones. And as a result, compared to those in other regions, including the advanced ones, SME markets have become large in East Asia. And this has resulted in SME markets becoming really large in that region. So we can look at East Asia for examples on how we can grow our SMEs and borrow from them. So I'll share a little bit about the CAM SME Hub. The association aims to promote manufacturing sector growth through the capital markets in line with our partnership with CMA. We have a signed MOU with the Capital Markets Authority, and we want to promote this by jointly identifying and analyzing funding gaps, looking at institutional challenges and any impediments to industrial growth, and also recommending the best reform approaches. Our Manufacturing SME Hub provides a platform to prepare, nurture, and grow manufacturing SMEs to take full advantage of the available markets by addressing the challenges they face, among them access to affordable finance. So through this partnership with CMA, we hope to increase the participation of SMEs and other manufacturers in the capital markets. So thank you very much for listening to me, and we look forward to addressing any additional issues during the panel session. Over to you.
Thank you so much for that, Ms. Felix Wakiyaga, who is the Chief Executive Officer for the Kenya Association of Manufacturers. I think what Felix has said is, yes, the manufacturing sector is actively looking to engage with the capital markets just to look for opportunities to raise funding. And this conversation is becoming ripe, and we look forward to having your questions so that we can relay them through the panel discussion. Are you in the manufacturing sector? What are your challenges? Outside of access to raw materials, do you have challenges when it comes to working capital? Do you have challenges when it comes to scaling your business? Perhaps we would like to hear your commentary on that and hear your questions more specifically, and we can answer them and address this during the panel discussion. We are in the second segment of today's National Capital Markets SME Forum 2020, and we are having the SME sector specific presentations. We have a total of 6 presentations. We've already had our first presentation from Ms. Felix Wakiyaga, the Chief Executive of the Kenya Association of Manufacturers. We have 5 more from the following individuals. Ms. Esther Ndeti, who is the Executive Director for the East Africa Private Equity and Venture Capital Association, will make a presentation on how PE and VC can partner with capital markets to enhance startup and sustained SME growth in Kenya. Thereafter, we'll have Ms. Patricia Ithao, who is the Director for the MSMEs for the Kenya Private Sector Alliance, and she will be presenting on the role of private sector in promoting access to finance by SMEs through the capital markets. Thereafter, Mr. Daniel Aderetti, who is the Head of Credit Risk and Compliance at Possession Limited, will present on leveraging fintech and alternative finance opportunities for SMEs. Ms. Dana Gishaga from the Kenya Industry and Entrepreneurship Project will present on the capital markets partnership with the Kenya Industry and Entrepreneurship Project to improve SMEs' performance. Last but not least, we'll have Mr. Vasu Abutola, who is the Chief Executive Officer for the Nairobi Business Ventures, presenting his transformative journey through the capital markets from a former SME listed company and what his experience has been. At 12:15 or thereabout, then we will have all the presenters come and sit in a panel, and our panel will be made up of Mr. Geoffrey Odundo, the Chief Executive Officer of the Nairobi Securities Exchange, Mr. Jobwa Johi Mureithi, who is the Head of Policy, Research and Advocacy for Kenya Association of Manufacturers, Mr. Esther Ndeti, Executive Director, East Africa Venture Capital Association, Ms. Patricia Ithau, Director, MSMEs at CAPSA, Mr. Daniel Aderetti, Head of Credit, Risk and Compliance at Possession Limited. A really long list of things to do, but one where we still want you to be part of this conversation. Please put your comments. What is your feedback? What is your response to this presentation? We will take all of this and bring it through when we get to the panel discussion. For our next presenter, Ms. Estendeti, kindly prepare to unmute your mic and share your video so that you can be able to take us through how PE and VCs can partner with the capital markets to enhance startups and sustain SME growth in Kenya. Please go right ahead, Ms. Estendeti. Ms. Ndeti, please unmute your mic and put on your camera, and you can take over and present to us. Right, as we are waiting for Ms. Ndeti, Kani, do you have any responses or reactions to the presentation from the Kenya Association of Manufacturers?
Thank you, Mbide, for, I think the presentation from CAM was quite intriguing, very candid in terms of just mentioning some of the challenges that SMEs are going through. I think, and also proposing solutions, which will be seen as our takeaway points to address as we engage SMEs further to see how we can assist them also access market-based finance. Now, in terms of looking at the whole banquet of challenges, which I think are generally across various jurisdictions. Felix mentioned how East Asia and Asia has, managed to address some of these problems and brought out the vibrancy in the SME industry. Of course, we are very keen to see what they've done so that we can be able to learn from their experiences. We have seen what China has been doing in terms of even facilitating for technology boards just to address a special niche of SMEs who would want to also to access market-based finance, but who needs or require a different set of probably legal framework or different understanding of how you look at or you assess them in terms of eligibility for market-based finance. So those are some of the challenges we'll look at and we'll address as we take these learning outcomes. Now, in terms of just feedback from our social media sites, I probably can just bring in some of the comments we are receiving from. I can see Paul Kukubo saying thank you for this forum. It's very informative. We have Nick Mtunga saying great job, very informative. Charles Kiarie, thank you for your updates regarding CMA. Thank you for your points. Please. Let's continue engaging on our social media platforms. And our hashtag is hashtag SME Forum 2020 KE. Let's tag all our friends. Let's comment on our social media pages. That is at CME Kenya, at NSC_PLC on Twitter. And let's let the message get out.
All right. Thank you so much. I think because we still have Ms. Felix Wakiyaga here, we have a question for you. If you're able to kindly unmute your mic and put on your camera, we could have a follow-on question. And as you can see, Esther is back. So Esther, prepare, just mute your mic. I'll ask Felix a question and then I'll come right back to you. So Ms. Wakiyaga, thank you so much for the presentation. And your body interacts a lot with the manufacturing sector. What would you say is the funding gap? And when you say that you see an opportunity of engaging with the capital markets, is there a market size or a ticket size or an amount of funding that the capital markets could possibly step in and begin to consider in terms of funding in the medium to the long term? Over to you, Ms. Felix Wakiyaga.
Thanks, Mbida, for the question. And you're right that there is a funding gap, but our members range from different sizes. We have SMEs, we have medium companies, we have large companies. So it depends on the sector or the area of business that we are looking at funding. So it's an open ticket. I wouldn't give a ticket amount and say that this is the amount of funding, but what manufacturers are looking for is patient capital. Because of the nature of manufacturing, by the time you invest, bring in equipment, start running, get your product into the market, they really need patient capital. So that's really one of the characteristics that we would be looking at as we fund the manufacturing sector. Also, one of the biggest challenges they've had is the issue of high interest rates, because that really affects the competitiveness also. So as we structure funding for the sector, I think those are the considerations that we have to look at and see how we can have patient capital to allow manufacturers to invest and get into the market and be able to recoup their investment. Thank you.
All right, before I let you go, Phyllis, one follow-up question, and really this is from my end, because you're saying that there is the need for long-term capital. And when we look at the statistics coming out from some of the reports from your association, the contribution of manufacturing is reducing on a year-on-year basis. If this sector is to attract a long-term capital, yet its contribution is reducing on a year-on-year basis, then what's the assurance or what are the considerations that this long-term capital needs to have to be assured that if it deploys capital into the manufacturing sector, in 10, 15, 20 years, this sector will still be vibrant and able to generate a return for shareholders? Over to you, Felix.
Thank you for that question. The manufacturing sector, you're right, the contribution is currently about 7.5% to the GDP. The ambition, however, is to get the sector to contribute about 15% to the GDP. This is in line with the Vision 2030 that the government really the development footprint until the year 2030. So that commitment from a policy level at government level exists. So for that reason, I think for investors within this sector, there's a commitment at policy level. There's also the reality that people will continue to consume products. Every day wake up, you have to eat something, you have to wear clothes, you have to drive a car. So the consumption of products will continue to happen within the country. We also have a lot of markets opening up, like the Africa Continental Free Trade Area that will come into force in January 2021. We've seen recently even the UK Economic Partnership Agreement that was concluded and signed this week by CS Industry. So there's a lot of opportunities in terms of market expansion. So the opportunities in the sector, I think, would really be what an investor would be looking at, because if we are able to exploit the opportunities, take advantage of the markets that are opening up both domestically, regionally, and internationally, I still believe that the manufacturing sector is a viable sector to invest in.
All right, thank you so much for that assurance. David, I don't have anything more else to add. Do you want to add something, or shall we go ahead to introduce our next speaker?
I think we will have much more discussions when we get to the panelists, so that some of the questions that are coming in, we can probably fill them at the panel. But to thank Phyllis for taking us through that presentation and hoping that we can have much more interactions so that we can also bring the manufacturing sector into the capital markets forum.
Thank you so much for that, Kanye. Now we have our next presenter, and I can see she's ready and eager. This is Ms. Esther Ndeti, who is the Executive Director of the East Africa Private Equity and Venture Capital Association. Esther, over to you.
Thank you, Mbitha, and apologies for the technical hiccup earlier. I think technology always chooses the best time to showcase its, full risk factors and what can go wrong at the very opportune moments. But I'm grateful to be here.
It's okay, Esther, but before you go on, allow me to slightly interject. Would you mind just flipping your laptop closer to you so that we can get a full frame of your face, please? Thank you so much.
Can you see me now?
Just a little bit more. Just towards you. That's it. Fantastic. Thank you so much, and please go right ahead.
All right. So thank you for having me. It's a real pleasure for me to join today's webinar conference and share insights on how private equity and venture capital can partner with capital markets to enhance SME growth in Kenya. For those unfamiliar with the EAVCA, we are the umbrella organization that represents private equity and venture capital funds in East Africa. We were established in 2013 by 7 founding fund managers with operations in East Africa. but we have since grown to over 100 members spanning 5 countries, Kenya, Uganda, Tanzania, Ethiopia, and Rwanda, but also representing DFIs, PE, and venture capital funds, asset managers, and advisory firms. At the core of what we do is promoting East Africa as a private capital destination, while ensuring a favorable environment for trade and for the private capital sector. Our advantage is being able to provide local access to our members, which is critical to their East Africa strategy. So for purposes of today's discussion, I thought I would introduce a bit of an industry overview of what private equity has looked like in Kenya and in Africa up to date. I think it's important to recognize that private equity in Kenya is a nascent industry. A decade ago, the PE industry in Africa was largely confined to Southern Africa. And then between 2008 to 2010, nearly 60% of investment in sub-Saharan Africa was destined for South Africa, with regional hubs like Nigeria and Kenya trailing far behind, both in market share and in mind share. Then, aided by continent-wide resilience in the aftermath of the 2008 global financial crisis, the region's growth story attracted an influx of private equity investors to this market. The new entrants decided to look beyond the increasingly crowded South Africa market to explore regions like East Africa and Kenya in particular. Kenya became an increasingly important destination for PE investors for a variety of reasons. Thus, when PE interest migrated from South Africa to the rest of the continent, Kenya captured a disproportionate share of the activity, both in terms of deal flow and in terms of funds. So today, Kenya ranks third behind South Africa and Nigeria in terms of private equity transactions in sub-Saharan Africa, having witnessed tremendous growth over the last 10 years. The number of PE funds actively investing in this region have increased from an estimated 36 in 2014 to an estimated 125 in 2019. So with this significant population...
Sorry, once again, Lita here. So I wanted to see if you're speaking through a presentation, would you like to share it by sharing your screen with us?
So because if you remember, my laptop has a problem at the moment. I'm scared.
Okay, not to worry. We'll share this later on after the conversation. So we're listening and then we'll to share
which is what I tried to do earlier, then it crashed. So let me just go
not
on.
To
and
worry.
then
Thank you so much. Please go right ahead.
Okay. So we've have a significant population of investment firms in the country and more deal flow than anywhere else in East Africa. Between 2017 and 2019, PE and VC firms have invested over $2 billion in this market, which is a significant share and shows a lot of promise for the businesses here. So today we will be looking at the opportunities for increased base of private equity and venture capital firms and how we can partner with the capital markets. I decided to narrow this down to 3 broad themes, one being fundraising, so increasingly looking at the local capital sources, and then the second being exits, and the third being partnerships and programs. So looking at fundraising on a global scale, we'll see that private equity and venture capital in Kenya is underpinned by foreign capital. Within the Kenyan market, the primary sources of capital for PE and VC are DFIs and foreign institutional investors. So, unfortunately, well, they play a significant role in attracting capital into this market. But out of the total private equity funds raised globally, which between 2007 and 2014 was at about $4.8 trillion, East Africa attracts less than 1% of this. So the $2.7 billion that has been invested between 2007 and 2014. So while international and DFIs have played a significant role in being able to catalyze investment in this market, we as the EAVCA and the PE industry see that the most promising source of capital for PE and VC should be local domestic institutional investors. Thankfully, the Kenyan government adopted a series of reforms to allow pension funds to invest up to 10% of their portfolios in PE and VC. and this was licensed by the Capital Markets Authority back in 2015. There was an initial slow start where local institutional investors are slowly warming up to the assets. Data from the RBA shows that between 2016 and 2018, investments into PE had grown at a compounded annual growth rate of 98%, only to represent 0.1% of the multi-billion-dollar asset under management by pension funds. Nevertheless, we've discussed with fund managers and pension fund managers and the RBA to reveal what critical obstacles are holding back investments into the asset class. And these obstacles include a general lack of familiarity with the asset class, sensitivity to the high fees charged by alternative investment managers, and a lack of incentive for pension fund trustees to direct their funds into a new asset class. So the EAVCA, the CMA, and the RBA have worked diligently over the past.
All right, we seem to have lost Esther as we are waiting for her. Those are very interesting statistics coming out. And Esther is saying that only 1% of the capital that's raised in private equity and venture capital has found itself to this part of the continent. That's a very slow sum, and I appreciate the efforts between what the EAVCA, the Capital Markets Authority, and the Nairobi Securities Exchange is doing just to extend the visibility. But Kanye, we are only hearing about foreign capital, yet we have regulations that have actually been changed to be able to facilitate the inflow of private capital into the venture capital space as well as the private equity. What is your sense of the relationship between our capital, which is the domestic capital, and this particular asset class? Over to you, Kanye.
I think, thank you, Vida. We of course have regulations on venture capitals, but we've seen very slow uptake of those regulations. However, on the flip side, we have seen a lot of vibrancy in the private equity space. I think just before we lost Ms. Ndeti, she was mentioning that there is a lot of deal flow through Kenya. And if you can look at some of the reports that are coming out of the region, we actually have about 83% of those deals just being concluded and going into various sector-specific companies that are in this region. So if that's the case, then what we need to address now is how do we get some of these institutions, as they access this private capital, how do we get them to also benefit from the long-term nature of capital markets in terms of tapping into patient capital from pension funds, and also facilitates also the growth of those companies through a long-term horizon that gives them a bit of a leeway to appreciate the full cycle from startup all the way to maturity of the companies. And I think that is the benefit of us having this conversation. And probably, I don't want to preempt what Esther would say. We have a lot of partnerships with the EAVCA. We've had a running MOU with them, and just recently in the Recent Finance Act, we have mandates to develop together regulations so that we can see the nexus between private equity and public markets and how that can be supported.
Okay, fantastic. Thank you so much for that, David. Also, when I look at the capital markets in Africa and in Kenya specifically, there's always so much for that, David, for that overview. But I look at the capital markets in Kenya and in Africa, there's always the issue of, yes, we need domestic savings to be put into risky ventures, but we haven't had the appreciation or the luxury of time to accumulate savings. I can certainly appreciate that foreign capital has probably been building up for centuries, for hundreds of years, and they have the luxury to come and invest here. And perhaps it will take us a bit more time, but nonetheless, we certainly appreciate the work that's been done by the Capital Markets Authority, the Nairobi Securities Exchange, as well as the East Africa Venture Capital Association. Patricia will be presenting to us next, and she will be presenting the role of the private sector in promoting access to finance by SMEs through capital markets. Ms. Patricia Ithal is the Director for MSMEs at the Kenya Private Sector Alliance. Patricia, kindly unmute your mic, put on your video, and if you have a presentation, I'd kindly ask you to share your screen.
Good morning, everybody, and I will say all protocols observed.
Please unmute. We can't hear you, Patricia.
I have unmuted. Can you hear me?
Okay.
Thank you. All right.
Yes,
so
we can. Thank you so much.
I'm assuming you can see my screen now.
Yes, we can. Please go ahead, Patricia.
Thank you. Just give me a minute. Let me now come onto it. Oh dear. You do see my screen?
Yes, we do.
And you can see the presentation. Now, the only problem is I can't see the screen myself. Just give me a minute.
Can we upload it for you?
No, it's fine. I will just use what I have here. Okay. Good morning, everybody. Is it on full screen?
Now you can put it on full screen now. We can see, but it's not on full screen.
Is it on full screen now?
Yes, it is. Thank you. Carry on.
All right. Good morning, everybody. And it is a pleasure this morning to be speaking at this great initiative and a fantastic forum. So let me start by very quickly giving an update and just introducing KEPSA. I'm sure a lot of you do know who KEPSA is, but I'll just give a very quick highlight. As you all may know, we are a limited liability membership. We're an organization that is the apex body of the private sector in Kenya. We have membership of all business associations, as well as corporates, SMEs, startups, trade associations, and multinationals across all the sectors in the economy. Currently now, as KEPSA, we do have 94 direct SME members and about 58 startups in our structure, in our membership. If I then talk to what we do and what's our engagement, we have a governance structure which allows us to engage stakeholders, because our primary role, as many of you know, is really to drive advocacy for the private sector. So if the way we deliver our mandate is through a number of public private dialogue platforms. The established ones are at the highest level, the Presidential Roundtable, where we actually, having listened to all the dialogues from all the different sectors as we have structured them, these being from agriculture to East African affairs to transport, just across all the sectors, all the dialogues there and other established platforms, which include ministerial stakeholder forums, private sector NDIC roundtables, our speaker roundtables, meeting with governors, regional forums, etc. We're able to bring together all those conversations in order to make sure that the voice of the private sector, the challenges and the opportunities that are faced are heard at not just the sectorial level, but across all the different levels from the executive to the judiciary and all the way up to the presidential level. So then when we look at the overview of the SME sector, I will not belabor this slide because everybody has shared these statistics. It is now very well established fact that SMEs play a very key role in the economy. And indeed, if we look at where all the creation of jobs right now is coming to, almost 84% of the workforce actually is delivered through SMEs. But one of the saddest things, as we recognize, even as we have this conversation today, is that 79% of those SMEs, MSMEs, are unlicensed and they operate informally. Now, if we're to have the conversation we're having today, this becomes one of the biggest hurdles or one of the biggest challenges in terms of how do we formalize and get them to create structures that allow them then to be available or to access the opportunities that we're speaking to today. So as KEPSA, we look to one of the biggest areas that we look at in our advocacy platforms, alongside all the policy things we look at, is how do we support SMEs to access affordable financing? We all know that we're in a market where finance is generally not just inaccessible, but when it is accessible, it tends to be very expensive, or there are very, very many different hurdles that you have and many loops that you have to jump in order to access it. So as KEPSA, we have a number of initiatives that we drive in order to try and, remove some of those barriers and improve the ability for these SMEs to get this finance. So first is driving the integration of SME development in our business strategy. So that's fully embedded. How do we make sure that in our strategy, everything we do, we're looking to see what are the areas that we can use to help SMEs develop a little bit better and improve their access to finance. If we look at one of the other biggest hurdles that we've had is encouraging SMEs to be part of us, because when they're part of us, then they are able to speak and they're able to share their thoughts and ideas, and then they have a voice. So if you look at our categories, we have tier 2, tier 1, and all the way to startups, which allows, and with, largely subsidized rates, which allows them then to participate in the advocacy and all the policy discourse that goes on, and also to be part of all the forums that I shared in the first slides, where we engage with all sectors and all leadership in the country. We also then support the private-public dialogue on the legislation that is going on. Right now, we are involved in the Startup Bill 2020, the Prompt Payment Bill, again of this year, because if you look at one of the biggest challenges any business has, and by the time it gets to the MSME, is this issue of pending bills. You do the business, but you don't get paid. So we are really lobbying and working to support that particular legislation to come through, because that, again, we see as a great area to support affordable financing for the sector. We're also looking at the MSC policy and what are the areas to unlock this whole sector to make it easier for them to do business in this country. And of course, we also focus on looking at what are the constitutional changes that can be done to enhance the efficiency of SMEs. On policy advocacy, so the legislations that KEPSA has developed and which we participated in, we did support the Private Members Bill that developed the MSME Act of 2012. We have been involved in the reforms to ease business registration and improve regulations in terms of limited liability partnerships. This was the Act of 2011 and the Company Act of 2015 and the Business Registration Service Act of 2015. We were also involved in the Movable Property Security Rights Act of 2017 that enabled e-collateral registry to ease credit access. We're currently now been very involved in this last year in the establishment of the credit guarantee scheme, and now pushing for the fast tracking of this and the execution of the same. Also working on how there could be consolidation of all these funds, the youth and the women and enterprise funds, to form a biashara bank for SMEs, which then eases access and also allows lower hurdle rates for that access. And of course, we did work on supporting the SME division at KRA, and it is now fully operational. And this is supposed to help SMEs formalize and create structures and enter tax brackets, which again allow them. These are some of the areas that allow them, if you want, they want them to enter the capital markets and all these other areas. These are some of the things that they cannot avoid and they have to embrace. Finally, the MSME Policy Index, we have considered 8 policy dimensions to assess how facilitative Kenya's policy environment is to MSMEs, including access to credit. So If we look at this year in particular, I mean, I think it would be very difficult to speak anywhere this year without talking about the impact of COVID. And we have recognized that if there's one thing that has happened this year, is that COVID has had a huge, huge impact on people's lives. And if you talk about business, it has had enormous impact on the financing and the ability for businesses to operate. So one of the things that we did is from a recovery and resilience is we partnered with MasterCard Foundation to launch a fund that would provide loans to MSMEs affected by the pandemic and who would ordinarily find it difficult to access formal financing from banks and microfinanciers. So the objective is for them to help them safeguard their businesses and protect the job losses due to the prevailing market disruption. And this is a project that we've embraced for 1 year, already started reviewing and making offers on this fund, and the applications have come through, and we have already started to give this funding to these both micro and SMEs in totality. If you look at the loan details, it has 0 interest rate and no collateral requirements at all, which, as you can imagine, is what you'd be looking for now. The amounts that we're issuing is from 100,000 to 1.5 million. You repay over 6 months, but you do get 1 month's grace period. And the loan applications have been availed readily on the KEPSA SME portal and through our www.smekepsa.or.ke platform. We have received over 400 loan applications so far, and we've already started dispersing the funds. If you look at the eligibility for this fund, we have said we want to focus to the most vulnerable businesses, which tend to be owned by women and the youth. They're micro small with up to 50 employees. They have to experience and demonstrate the challenges that they've had through the pandemic. The operations, they have to have operated for more than 6 months. And we have to see that, you know, from the projections that they have, they'll be able going forward with the assumptions that with the easing of restrictions, with the optimism that we have of a vaccine, et cetera, that they will be able to recover their business and that they can be paid. And one thing that, of course, we do have restrictions in terms of businesses that we were not looking at, you know, alcohol, tobacco, weapons, war-related, gambling, betting, etc. We did have to have some guidelines around some of the businesses that we would not be looking at. So that's one of the areas we've done to support SMEs look at financing at this time. Other support programs that we've had for SMEs is IFC created a facility in partnership with Equity Bank, and that again is another area, and which is we are looking at our membership and supporting them in driving access and visibility of that. Commercial banks, as you know, have many commercial banks all restructured their loans. And this is fantastic. If you look at what the private sector, from a private sector perspective, that was a great initiative, and up to 1.38 trillion loans were restructured over this period by the private sector. Safaricom, one of our big members and the biggest player in the private sector in this market, reduced their fees for transactions of 1,000 shillings. Another banking member of ours and part of the private sector, they offered 3-month repayment holidays through its gender targeted offer, its data offer, and of course, companies such as Facebook have been offering grants targeting small businesses to cover operational costs such as rent, minimal staff costs, etc. Others are digital commerce platforms. We partnered with Trademark East Africa for an e-commerce booster program that trained 2,000 SMEs on e-commerce and digital marketing. We had technical assistance in partnership with the Educate Global Rapid Technical Assistance Response Team to support businesses on food, health, and educational sectors to support them in terms of how they can restructure their businesses, how can they can review their strategies, and how they can address their operational issues, especially at this time, to make them more resilient and flexible in order to allow them to continue operations. We then offered mentorship with partnership with the Embassy of Ireland on women and youth in business. We do run weekly training and mentorship sessions virtually to support these businesses. And we have begun the second phase of the Ajira digital program, which is aimed at training the youth to equip them with skills for digital and digitally enabled jobs. So when we look at the conversation that we have today, which is financing through the capital markets, KEPSA does appreciate these opportunities that CMA and NSE offers, including, of course, the growth and enterprise market segment, which the CEO spoke to earlier this morning and shared. It is a very favorable listing condition for SMEs to raise finance, and the amnesty extended in 2019 on tax and penalties on accrued before listing is something that is very, very welcome. So for us, we do recognize as a private sector that this is there is a huge potential to bridge this. But what are the challenges that will hinder some of this uptake? One is, as I said in the beginning, we have all these SMEs that are operating in this country that are providing all these jobs, but guess what? A lot of them are informal. Many still remain unregistered, which will affect their ability to participate. There's also the challenge around the legal fees and other costs involved to make them compliant. We recognize that there's a lower financial literacy amongst SMEs. There is also a general lack of awareness, very many opportunities, but a lack of awareness on the financing opportunities available and how to participate. And of course, low capital investments due to lack of favorable policy environment and the risk involved. So those are some of the challenges we recognize, that yes, this opportunity exists, but these are the challenges when in the preamble I've given, in the policy, in the training, in the conversations that we're having, these are the challenges we've recognized and we're trying to unlock in the work we do. Having said that, we do have proposals that can enhance access to this opportunity that exists in the capital markets. One is really working to create, with everything we do and the areas that I've spoken to earlier, creating these enabling environments that will attract these venture capital investors who can come support these organizations, can support SMEs, and then in that allow them to create more structures and environments with stronger governance structures, which then will allow them to access some of these opportunities on the CMA. The other thing is de-risking these SMEs to enable them to attract financing. And when we talk about de-risking, is encouraging them to create more formal structures, encourage them to formalize who they are, enter the tax bracket, create governance structures, all areas that make them more attractive for financiers. The other thing is supporting the formalization and some of the areas that have been spoken to, waivers on tax penalties when they do come into the tax bracket, then start to become very attractive. We have also spoken about the capacity building and the work that we're doing, the financial training, tax, etc. These are all areas that can then help them become more able and give them the ability to embrace these opportunities. And then the last thing is, of course, supporting the culture of saving in a country and investment. And as a country, we do know we do pooled investment. We have a lot of chamas, as we call them locally. Now, really formalizing those chamas in the areas we've talked to above, and then allowing them to say, okay, instead of retaining your business in the informal ways you've done it now, how do you then start to access products such as the gems offered by the capital markets to really exploit who you can be in the future and start to become the equity banks of the future. So as private sector, we will continue to support this championing of this enabling policy and regulatory environments. We will continue to mobilize private and equity and capital investment into SMEs and partnerships which build the capacity building, which facilitate the capacity building so that the opportunities that have been spoken to this morning start to become a place where SMEs can begin to say, actually, it's not for the big boys, it's not for the multinationals, it can actually be for us as well. And with that, I end my presentation and I say thank you very much for allowing us to speak to and to share who we are as KEPSA and what are the areas we are working on to support SMEs and indeed to look at how we can support them to access the opportunities on the capital markets. Thank you.
Thank you. Thank you very much, Patricia, for that presentation. I think I like what I'm hearing in terms of the challenges that have been said earlier by CAM, challenges that have been mentioned by KEPSA on behalf of their members. And I think this is the reason why we are having this conversation. Just listening to just the conversation we're having, you mentioned about some of the SMEs of course being very informal, and maybe we need to look at find ways of pushing those SMEs into the formal in a formal environment so that we can now start the conversation of how do we then onboard you to attract capital from investors who are looking for that kind of business or that kind of risk, and they're comfortable in that. And you've also mentioned about upskilling, in terms of financial literacy, and also ensuring that SMEs have the requisite skills also to deliver from their end. And I don't want to preempt the conversation that we'll have later on with Diana Gishaga, who is very apt in terms of helping SMEs capacity build and supporting them through the KIEP project. And I'd be happy to listen to the two conversations on how they tie in and how the two institutions can work together to help SMEs as they try to build up on their capacities. I'd like to invite the next speaker, and thank you very much, Patricia, for that presentation. And we'll be talking more with Patricia during the panel discussion. So for all your questions, keep logging in the questions. We are receiving very many questions for the panelists, and we'll have that conversation once we get to the panel discussions after these presentations. For our next presenter, I'd like to invite Daniel Aderetti, Head of Credit, Risk and Compliance at Pesesha Limited. Daniel will be taking us through leveraging fintech and alternative finance opportunities for SMEs in the capital market, and will, of course, benefit from a crowdfunding case. And I would like to say that Pesesha is one of the companies that has benefited from the capital markets regulatory sandbox. And of course, this is a new form of alternative financing opportunity where SMEs that are struggling with funding gaps can also utilize these kind of opportunities. Daniel, I don't want to preempt your presentation, and I'd like to welcome you to make your presentation. Please unmute your mic. I can see your camera is on, and probably upload your presentation. Thank you.
Thank you very much, David. Just give me a minute. Let me share my screen. All right. Can you guys see my screen?
Yes, we can. We can see.
Fantastic. So first off, I would like to say thank you very much to the Amnesty and CMA for creating this fantastic platform for us to have this important discussion, especially around this kind of time. My name is Daniel Aderetti. I am the Head of Credit Risk and Investment Compliance at Pesesha Africa. And I'm going to be talking to you guys for the next 15 minutes about how Pesesha is leveraging fintech and alternative finance opportunities for SMEs in the capital markets. It's also quite exciting to hear from the other participants in the SME sector, also from the CMA and the NSC team, about the challenges in these markets. So I'm just going to touch on two major challenges that we have identified. The first challenge that we do see, as detailed on the graph on the left, is there is a clear financing gap that we're currently facing in these markets. We have estimated it at $328 billion annually. And on the right, you can see that we've tried to divide this gap by a number of countries. For us at Pesesha, we're heavily focused on 2 countries right now, Kenya and Ghana, for 3 major reasons. One is the size of the MSE market. The second is they are markets that have enabled mobile penetration, and they also have friendly regulation partners that we have been able to work with in these markets. The second problem that we also see is it's quite challenging for MSMEs to raise capital in this market for 4 major reasons. So one is, it's obviously difficult to assess their credit risk because it might be time consuming. It might be difficult for you to obtain information from these MSMEs. The other reason we found out is financial institutions don't actually have the requisite skill sets to be able to deal with this, to be able to create business models for businesses at this kind of scale. The third reason is financial institutions also take a longer time to do final approvals, so they might not be able to meet MSMEs when they actually do need cash flow. And the last reason we identified is financial institutions also find it very difficult to effectively manage loan at this scale. Now, what is our solution? For us at Pesesha Africa, we have created a digital end-to-end value chain platform that brings sophisticated investors and eligible MSMEs together to one location. And we do this through 3 major things. The first thing is the way we define MSMEs is in 3 different ways. Our borrowers are largely either micro businesses, either informal or formal businesses, small, medium scale businesses, or businesses that are tied to a supply chain partner. I'm going to be explaining what that means later. Then the other thing is we also bring sophisticated investors to this case. And the way we do that is we look for individuals that clearly understand the risk they are taking in this asset class. We also take them through a round of education for them to understand the market returns that presents the market, and for them to have their own individual risk preference. Now, we do this entire platform in 3 major ways. For every SME that comes into our platform, we take you through a core financial education model for you to understand the general ideas around taking a loan, and also for you to understand what our loan parameters look like to you. Then we also go through a round of alternative credit scoring models by which we use your transaction data to come up with 3 major things. One is your loan amount in the first place. The second is the loan tenor we're going to give you and how we determine what your interest rate is going to be. Then for the investors, we actually have a matching algorithm that allows you effectively to diversify your portfolio. So the way that works is when you come into our platform, we expect you to have your idea of risk tolerance. So how much risk do you want to take? You put that on the platform. Then whenever we qualify an MSME to come into the platform, we tier their loan amount into what we call a debt note, and we give at most 2% of that debt note to you as an investor. So we try as much as possible to diversify your risk across the pool of MSMEs that we have in our portfolio. Now, this slide is just to explain the extra step we go through. We pride ourselves by going through a risk-based process. The first part on the left explains how we come up with what our annual percentage rate is. The first major criteria there is our business target return on equity. And as I go through this presentation, you would agree with me that Pesesha Africa is quite a nimble operating entity. So our target of return on equity in itself, is quite favorable to these markets. The second thing that we do is your individual credit rating. So when we take your transaction data and we go through it in depth through automated credit scoring models, we come up with what we call a credit rating that is divided into 5 categories. So it goes from A, B, C, D, and E, and we only lend to A, B, and C. And the last part we decide that is the principal amount that you want to lend, because that is a reflection of the size of the business and the amount of information that you have to give to us. The second way we go through that is through our security package. So for our MSMEs that come through the supply chain platform, we have direct debit with the merchant wallet and with our suppliers. Then for individuals that are borrowing above 150,000 Kenyan shillings, we have stated security packages that we do ask and we do request from you. So if you're an investor in this platform, what are the extra things that you do benefit apart from just investment returns? There are 3 things that we identify. One is low reinvestment transaction costs. So as you remain a part of this portfolio, we do not charge you for investing your initial deposit with us. The second part is you have your incredible opportunity to compound your investments. So as you stay with us, you actually have the opportunity to reinvest your principal, your initial principal, and your earned interest after your initial investment period, and continue with us for the benefit of compounding. The third thing that we identified is we also pride ourselves by having strong portfolio unit economics, and this is a feature of two things. One is by product design, we ensure that whatever loan that MSMEs take on our platform is directed just solely for business purposes. And we also go through iterative credit scoring models for us to get strong portfolio unit economics that works for our business. Now, I would also like to reiterate that everything I've said so far is not a new phenomena. For every one of us that are represented here in this conversation, we all have what we call savings groups in our respective countries. For me, from Nigeria, we have 3 different names that we call that. We either call it Ajo or Susu or Adashi. I know they are also called chamas in Kenya. And there's a statistic that is actually flowing around that says that there's greater than $3 billion revolving assets in Kenya chamas. But you can imagine if savings from these social groups can be utilized by platforms like Pezesha to fund SMEs and create network effects. So examples of network effects that we have seen is a merchant called Miriam. Miriam applied on our platform for inventory credit financing through our supply chain platform. We obtained our transaction data from our supply chain partner, came up with a loan amount, the tenor of the loan, the interest rates we want to charge, and we also took her through our core financial education modules. As interesting that we identified 6 major things. One is in the space of a quarter, Miriam had 5x income growth. She grew from 1 to 5 employees. We obviously can tell that she's contributing very nicely to the GDP. Through the financial education modules, you can see that she now has sound financial health, which equals to financial wealth. We have seen a clear graduation up the Pezesha ladder to larger loan amounts and longer term duration. And we have also seen a clear revenue increase that is driven by increase in customers and increase in productivity. Now, I also want to say one thing. The pie chart that is here explains private investment vehicles that are currently available right now in sub-Saharan Africa. And you can see that crowdfunding literally just makes 5% of that process. Now more than ever, now that we're moving post-COVID, fingers crossed the vaccine does come, crowdfunding models actually form an integral part of how we actually want to move forward in these markets for one major reason. The benefit of crowdfunding models is we democratize fundraising across a number of investors. So if you're a retail investor, there is nothing that stops you from participating in the market right now anymore. And if you're an MSME, we also have automated credit processes that allows you be able to, we can do your credit scoring on time, and we can also move to disbursements faster than meets what your cash flow potential looks like for your business. And there are also 3 major things that we identified for ourselves during the entire COVID period. We call it survive, reset, and thrive. And we go through each of these processes to help each of our businesses that come through our platform, either direct SMEs that come through our websites or through our supply chain platform. We take you through a number of things, and we try as much as possible to eliminate any form of bias that flows through our processes. So this slide is just to explain a sample size of merchants that have benefited from our platform. Miriam, who I mentioned earlier, and also Judith and John. It's very interesting for us to go through this kind of process by which we work with the CMA to increase the access to finance to MSMEs like this, who otherwise wouldn't have been able to find access to affordable financing in these markets. Now, interestingly, we're also very proud of the statistics that we mentioned here. We have been able to fund just in Kenya 775,000 MSMEs, and we have been able to educate 200,000 MSMEs and credit score them also, and disbursed over $2 million in this market. And we also see a very large financial gap, like I mentioned when I started my slide. The $328 billion number is what we're actually chasing down. And we also see such opportunities opening up in other markets, and I've been able to have friendly regulatory partners that we can work with. Now, it's also interesting that we have become friends with the CMA because they have been very useful to help us gain 3 major things. One is the trust in our platform. So it's very useful when you have a regulatory body that does give you that credence to what we currently do. The second thing they do offer us is strong foundation. So we now have the internal confidence to be able to create products that can scale, and we can move into other different jurisdictions. And the other good part is long-term commitment and collaboration with supply chain partners or any SME or any investor that comes to our platform. And we also pride ourselves on 4 different things that we know will contribute to the capital markets. And so the first thing is we are working very closely with the CMA to develop appropriate regulations through our learnings as we go through this process, as we innovate using our strong foundation. We are very closely tied to the UN Social Development Goals. We also know that we contribute very well to the positive impact to the equity market as well. So an example is what the NSE chairman mentioned about Ibuka. So that's somewhere where we know that the MSMEs that come through our platform, we make it easier for them to be investable and move into that kind of avenue. And the last thing we also know we contribute is it's easier for the CMAs to be able to generate more revenue for the government through income taxes that SMEs pay. Now, the beauty about this is what does the future look like to us? For us as Pesesha, there are 3 major things that we know that the future looks like. One is for the debt notes that I mentioned earlier, we know that there's a clear opportunity for where these debt notes can become a clear asset class. And as we diversify into other asset classes like fixed income, for example, the other thing is partners can also use our platform as an infrastructure as a service. And this is projected to be a $200 billion global industry by 2027. And the last thing we also know that we can move into is we are also contributing to the term open banking. And we are front-loading improved customer experiences, new revenue streams, and sustainable business models. So this is just a sample of individuals that we have worked with, both as supply chain partners, liquidity partners, or scale partners. And we invite everybody in this room, either as investors or lenders or MSMEs, to come and partner with us as we move into this journey to both grow crowdfunding models in sub-Saharan Africa and increase the access to affordable financing for MSMEs in this space. And the last thing is, it was very interesting yesterday that we actually won the 2020 AFI Inclusive FinTech Showcase. That was very interesting for us because they're a global entity that are also front-loading the usefulness of global regulatory incidences for individuals like us that are currently in these markets. And there are 3 major things that we know that this means. One is validation and confidence from global regulators in the AFI network. We also know we are creating real long-term impact on our Pesesha solutions, and it's obviously an opportunity to strengthen public-private dialogue and accelerating policies around alternative fintech solutions for the future of Africa. Thank you very much for our presentation.
Thank you very much, Mr. Daniel Adereti, and congratulations to you and the team at Pesesha. I mean, this is very exciting. It was very hard for me to sit still. I know we have been talking since 8:30 and it's now 11 minutes past 11. It's one of those things that there's so much happening. You're hearing snippets of what the stakeholders are doing, what the regulators are doing, what the associations are doing, and what SMEs in this sector are doing, and what funding is getting into the sector. I know there's a lot going on, but before I come back to Mr. Adereti, ladies and gentlemen, this conversation is so pertinent that I would just encourage you to dig right deep into your knees, into your toes, and look for that element of resilience. We have been told Kenyans, we are runners, but today we are not running away from this conversation. Today, we are switching gears and being resilient because we have 1 more hour of this. But we want to keep you seated for the next 1 hour. What we want to do is we want to have another brief presentation, 5 to 10 minutes max, from Diana, who's going to speak to us about how work. And then we take a very short break where you can probably, stretch your hands. If we were in a room together, it would be, can we call the rain? Can we touch our feet? Sing a song. We wish you a Merry Christmas. Perhaps David Kanye will sing for us, our co-moderator. I hear he's a member of a boys band, so maybe he'll have something scheduled for us. But let's just bear with us 10 more minutes and then we take a very brief break. Then we come back to our panel discussion. Remember, it's one thing to hear and engage with the different stakeholders and the captains of industry with regards to policy and activations, but it's another to be able to hear your voice. Are you a small business? Are you a medium business? Are you a large business? COVID-19 has happened and it has had an impact on your working capital as well as long-term funding needs. What do you want to know to be able to be part of the capital markets opportunity set? Yes, there are investors there, there are people willing to fund you, but what would it take for you to get here? We've had conversations looking at how do you de-risk your business, how do you put in the internal structures, but we want to hear what is your challenge, what is your perception, and what can the capital markets platform in Kenya do for you today? So as I said, 5-10 more minutes, then I promise you something special, starting us off with Mr. David Kanye, who will possibly sing us a jingle or two as we take a break. But first, let's get to our next presenter for today's conversation, and this is Ms. Diana Gishaga, who is with the Kenya Industry and Entrepreneurship Project. Diana, please prepare to unmute your mic, put on your camera, and you can share your screen with us. Diana will be presenting on the Capital Markets Partnership with the Kenya Industry and Entrepreneurship Project to improve SMEs performance. So we are still running live on Facebook. We are running live on Twitter. We are running live on YouTube. That's the Capital Markets Authority of Kenya page. We are about to sing a Christmas song, so do not go anywhere. Just 10 minutes with Diana. Then Kanye does a special debut for his special song. Then we can be able to have a testimonial from someone who's walked this journey, then the panel conversation. So we are almost wrapping this up. So over to you, Diana, for your presentation. Please unmute and share your presentation with us.
Thank you very much, Mbithe. I have the unenviable position of standing between people and a break. So I'll try and make this as exciting as possible. So let me just quickly share my screen, and then possibly also excuse myself from any other singing that might be done. I don't think we have insurance to cover the damage that I might very well wrought. Thank you so much. So I have just 10 minutes and I'm really excited to present to you about the KIEP 250 plus, KIEP 250 plus, and essentially this is a technical assistance project that has been instituted courtesy of the World Bank and the Ministry of Industry, Trade and Enterprise Development, also known as MOITED. And we launched this on the 20th of November 2020. So 2020 is a very good year for us. So what exactly does KIEP stand for? And the pronunciation is KIEP, Kenya Industry and Entrepreneurship Project. So this is a $50 million initiative that, as I mentioned, was put together by the World Bank and the Ministry of Industrialization, Trade and Enterprise Development, essentially to help private sector firms within Kenya strengthen their competitiveness and their productivity and increase innovation. So I'm here on behalf of my KIEP 250 colleagues, and this KIEP 250 project is managed by Niras, who is a consultant in consortium with Intellicap. Right. So KIEP has 3 components, and I'll just rush through this, but in case of anything, you can always chat on the chat or ask a Q&A for clarifications. We have what we call our component 1, and this is actually focusing on innovation and entrepreneurship ecosystem. So when we talk about the smaller end of the SMEs, this particular component will be dealing with it. KIEP has another component, component 2, which is what I'll talk to you about today. And as you can see on my screen, it deals with SME linkages and upgrading. So this is what we call KIEP 250 plus, and that is what I want to talk to you about today. So what is KIEP 250 plus? Essentially, this is a program that is aiming to build better SMEs. And how are we going to build better SMEs? We are going to be offering an integrated package of diagnostics, advisory services, and financial support. So those are 2 key things that I've highlighted. We are going to be undertaking diagnosis of the various SMEs that apply for our program. And then based on this diagnosis, once an SME is shortlisted, we develop performance improvement plan and actually provide technical assistance. So if you're an SME, you'll ask, okay, so what's in this for me? As an SME, what it's going to do is it's going to help you accelerate your growth through increasing your productivity, through increasing your competitiveness, because a performance improvement plan, as we will later see, is bespoke. So it's customized to you. And then secondly, of course, when you increase your competitiveness, then that means you're more efficient, especially in terms of carrying out your operations. So I know a lot of people have said there's so many programs happening left, right, and center. So what makes Key Up to 50 Plus different? Very simply, the SMEs that we are targeting, as you shall see, are those that we believe are close to acceleration. And the way we have defined this is with regards to minimum revenue criteria in terms of the SMEs that we are looking at. So we believe that if we help these SMEs, there'll be a ripple effect within the economy. Then secondly, is just the scope of the program. We have a target of assisting at least 250 companies within Kenya. And not only are we going to assist, we're going to be tracking these companies over a period of about 4 years. And then the third thing that makes Key Up different is we have a very inclusive model of nominating partners. So what is a nominating partner? Essentially, unlike other programs, which is just open, it's a call for application that's open to all SMEs and they can apply. What we're doing is we've created the role of nominating partners, and what a nominating partner does is essentially nominate or propose an SME to apply for the program. So that by itself is already a very unique aspect, and there's a reason we have nominating partners, which I'll highlight later. And then, as I mentioned before, we have bespoke technical assistance. So this is not about applying a cookie cutter approach, meaning having the same program or initiatives or interventions being undertaken for all these SMEs. We're going to undertake diagnosis. We're going to tailor make your own performance improvement plan together with the SME. So it's not prescriptive, it's participatory, which is actually the next point. And this is what we are going to carry out. So how does this particular program work? The Key Up to 50 Plus. This is about the 10 steps that we normally take, but fear not, I'm not going to cover them all. I'm just going to cover what is really essential, I think, for this call. And I'll be sharing a link to the website where you can get additional information, or an email which you can drop us any queries or clarifications at. So we do have a very extensive 10-step process. And the key steps that I want to highlight today is the first, which is sensitization, which is what I'm doing to you. Essentially getting stakeholders, SME, and players within the market, such as the NSC and the CMA, to know about the Key Up to 50 Plus project. And as we are here today on invitation of the CMA and NSC, there are collaborative partners, essentially ensuring that this information is out there. So the key thing to notice is we work through a call for application. So what does this mean? Over the period of 4 years, we are going to have 6 calls for application. So what this means is we reach out to the SMEs, we tell them that we've opened the application process, and the application process is normally open for a total of 4 weeks. We opened the first call, the first cohort, which was the first call for application on the 20th of November. And this closes on the 18th of November, so December. So that's 7 days away. So let me just repeat. We opened it on the 20th of November. We are closing it on the 18th of December at exactly 2 p.m. East African time. So there's still about 7 days for you to be able to apply. The other thing that we do is we're going to be having 6 calls for application throughout the 4 years. So even if you're unable to join the first one that is currently ongoing, you will have an opportunity to join the others as they come up. The other thing that's different is, as I mentioned, we are not approaching this in terms of trying to fit in a basic same approach to all companies. We are actually going to undertake diagnosis so that we can understand the factors within the SME that we believe might be challenging the SME or impeding the SME from growing and becoming more competitive or innovative. And then based on this diagnosis, we come back to the SME and say, these are the things we think that are the problem. The SME will come and say, these are the things that I think are the problem. And then through that consultative process, together with the partner that nominated the SME, we develop a performance improvement plan that is executed over the period of 15 months. So you must be asking yourself, okay, sounds like an exciting project. Who exactly are we targeting? Now, remember I said there's component one that is targeting the smaller end of the SMEs. We are targeting what we look at as the missing middle. Remember I mentioned that we're looking at SMEs that are close to acceleration. So what is the eligibility criteria? There needs to be a minimum turnover of at least 50 million shillings per annum, all the way to a cap of 1 billion shillings. And this can be over a period of the previous 2 or 3 years. So we realize that COVID has done a number of companies. So what we're not looking at a 1 year turnover, but we look at the average, or if over the period of 3 years you have hit that 50 million minimum, that is something that we will consider. Of course, we'll be asking you for audited financial statements, because we must verify that these figures actually are there. And then the key thing, as I mentioned, is you need to be nominated by a strategic partner. So you might be asking, okay, so who is a strategic partner? The Nairobi Securities Exchange is a strategic partner. So people such as financial institutions, I'm talking about your bank relationships, non-bank financial institutions, such as private equity firms or impact funds. So those can nominate. Also, if you're a member of a business association, such as the KEPSA or CAM, they can also nominate you, or lead farms. So if you are a supplier for a lead farm, such as Safaricom or Kenya Sweets Limited, they can actually nominate you. So the list of nomination, the firms that can nominate is quite extensive. And what sectors are we looking at? We are focusing on the big 4. Manufacturing, healthcare, food security, and affordable housing. And when we talk about all this, we are talking about the verticals and the value chain. So when I talk about verticals and value chain, say for example, when you think about food security, we are referring to agriculture. So across that value chain, we have people who produce the crops, we have people who provide inputs, we have people who do the processing, the packaging, the exporting, and the retail. So retail in terms of availing this to the B2C customers, it could be through supermarkets, it could be through restaurants. So all these things are actually considered. The other thing that we are paying close attention to is we want the women businesses to really apply. And the target for the program is we should have at least 20% of the 250 companies that have been shortlisted being either women-owned or women-led. So when you talk about the technical assistance that we're providing, how are we going to do this? Essentially, what we're going to be focusing on is improving your management, innovation, and technology through bespoke technical assistance that is provided to you. And this can be in the form of hiring consultants to help you think through or develop certain strategies that you've been looking to do. It could also, to some extent, involve helping you purchase some CapEx if that is shown to really improve your productivity and innovation, but that has a cap. And the innovation has to be shown that it'll increase the linkages, meaning it'll help you improve in terms of revenue and production. So what is the TA amount? On average, we're talking about $50,000 available to almost each farm. But as we said, this will be depending on how that particular farm needs intervention. So it's between 50,000 all the way to 150,000. And we need to be aligned with you as the SME. So we're looking at having an SME have own contribution of about 30%. So does this mean that you have to have liquid cash upfront? No, not necessarily. Your own contribution can either be in cash or in kind. And throughout the period of the technical assistance, all we'll always check on is if we've disbursed, say, X, then you need to be 30% of that. So if we've done 10 shillings, you need to at least have contributed either in cash or kind about 3 shillings. So who's executing the TA? I'm proud to mention that I work with a very great and experienced team of consultants on this project, and I'll just mention them, but we are not going to be doing the TA ourselves because it's impossible for us to have all the skills that are required. So we have specialist business service providers who are put together in a database, and they will be providing the services to the SME. And as an SME, we're not going to prescribe which business development service provider that you have to choose. No. Instead, what we've done is we've had a minimum criteria that's been established for business development service providers to at least ensure that we can verify that the services they claim to offer, they do. And then the SME just looks through the database and selects the business provider they want to work with. So what do I want you to do? I want you to go to our website, which is KIEP, and you can see it just here at the top of my screen, kiep250plus.co.ke. Go through the website and apply now. We have 7 days left, and if you need to ask any additional information, we request, the email is very simple, kiep250@niras.com. Please feel free to reach out to us. And that is essentially the end of my presentation. But before I end, I want to just recognize my colleagues and representatives from the ministry who are here today. So on behalf of my colleagues, we have Martin Susan, who's our team leader. We have Angela Karaoke, who's a fellow SME Growth Manager Consultant as myself. We have Liz Elizabeth Okunda, who's our Marketing and Communications Manager. We have Simon Kimura, who's our Grants Manager. And we have Hannington Isiaho, who is our Monitoring and Evaluation Manager. Then from the Ministry of Industrialization, Trade and Enterprise Development, we have Joseph Njeru, we have John Winami, and I believe we also have Matthew Nyamu, who have joined us from the ministry. I think, Kanye, I did my best and ensured that I say everything within the 10 minutes. So I hope this means that I don't have to sing. I can just quickly mute myself and that will be the end of it. Can you stop laughing? This is very serious. I don't sing. Thank you.
Come on, Dana, just have a song. Have a song. We wish you, okay, at least wish us a Merry Christmas.
I'd love to wish everybody on this call and within the capital markets a Merry Christmas and, more importantly, a bullish 2021. Here.
Don't leave yet. Don't leave yet, because you're not part of our panel. I'm very excited by what you've said, and you're the first person. Very many conversations I've had in this COVID-19 period that says 2020 was a good year. So that gives me a lot of excitement. And I'm very happy to also see what you are doing. And honestly, as a woman, I'm like, I feel like I qualify. The only thing is I don't have a business that has a turnover of 50 million. So at least I have my goals set out for the next 2 to 3 years. But you did say that it's 1 week to actually apply for this. Is it a straightforward business? I mean, is it a straightforward application process? Is it only open to women? Is it also open to men? I know you've highlighted key business areas, but maybe you could just dissect a little bit further. And I ask this only because I know you won't be part of the panel. Maybe you can just elaborate on that.
Okay, thank you so much, Mbithe, for that. So this program is gender sensitive, meaning women and men can apply. So the only thing is that we've said we want to ensure that out of those 250 companies that we are going to be shortlisting, we would like at least at the end of the 4 years to have 20% or more women-led or women-owned businesses that have participated. Is the application process simple? Very. Everything is electronic. In this digital age, we've tried as much to make the process as digital from end to end. So the entire application process happens online. All you need to do is just log in into the website that I've provided, and I'll key it in on the chat. Simply sign up, and a passcode is sent to the email that you've signed up with. And then from there, you can access the system, and everything is just online. And all you do is attach all the necessary documents. So process is very simple from start to finish. But what we like to encourage people is please apply early. Don't wait until the deadline. So that in case you have any questions or clarifications, you can send them to us at kiep250@niras.com. But we're encouraging as many businesses who fall within that criteria to please apply. And as we said, Mbithe, for the smaller businesses, we have component 1, which is going to be dealing with the smaller businesses. And again, through our partnership with the NSE and the CMA, when we come across wonderful businesses that might not meet necessarily the criteria, we are looking at how to ensure that there's a throughput through these 2 organizations, because we feel that they are able to also assist in that regard.
Okay. Before I hand it back to David, allow me to ask one other question just to clarify on the assistance. So it's a business that needs to be 50 million in terms of turnover, whether it's this year or in the preceding 2 years. What kind of assistance are you giving? Is it diagnostics? Is it helping them to scale? Are you connecting them to capital? What more specifically would they be getting out of joining this program?
Okay, I think that's a brilliant question. So as I mentioned, we know that 2020, for some people, has been a very bad year. For others, it has been a very good year. So what we're looking at is performance over the last 3 years. So if you've hit 50 million a minimum over the last 3 years, so your average, of course, or even more than that, we will be looking at whether you've reached that 50 million over the last 3 years, or if on average, your turnover is higher than that. So in terms of the assistance that we're providing, essentially think about it as going to a professional doctor. You're a company, you're an SME, you've come in and you've said, look, I think these are my problems. I have a headache, I'm sweating. So what the KIEP team does, the KIEP 250 team does is we analyze and diagnose a business and say, what is hindering this business from being more competitive based on the information you've provided, or being more innovative, or being able to increase their revenues, their productions, or grow into new markets. And if you look at our very simple application form, this is the information that we are looking at. So we are not asking you, it's not a beauty contest. We're not looking for the best of the best. We are saying, if you meet this criteria, come as you are, give us the information that you have, because this is the information we'll then use to say, we think you should be helped in the following 3 ways. And because it's participatory, you get to feed in on that and tell us, okay, I need to buy CapEx, I need to get a consultant to help me think about certification, or I need linkages to financial institutions, or, you know, put me on the Ibuka program, help me improve. So that's what we're doing. We are giving you technical advisory assistance in the form of financial grants, and it's milestone based from 50,000 all the way to 150,000. And we will support you over a period of 15 months.
Okay, fantastic. Thank you so much for that overview. So I'll hand it over to David and see if he can convince you to sing a jiggle too. David, what do you think?
I was looking forward to see the talent that Diana has always had. I'm sure she has a single somewhere which she can, you know, entice us with. So Diana, please, we can give you, 5 minutes to stretch. Then as you compose yourself and as you sort of put the lyrics in place, then when you come back, request you to probably sing for us. So we'll take a 5 minutes break. And when we come back, we'll have a very interesting presentation by Vasu Abutola, who will talk to us through his transformative journey. I don't want to talk about it. I want him to talk about it because it's a special message that he's going to be sharing with us, just showcasing how he's been able to utilize the capital markets to achieve some of the initiatives that they had set out to achieve, despite the challenges that have also accompanied the company over the years. So let's take a 5 minutes break, and then when you're back at exactly,
it's in 5 minutes, Kanye. That's 11:40.
20 to, yes, 20 to 12.
But guys, don't go anywhere. You know, Kanye is also going to practice on his vocals. You guys have to absolutely come back. So don't log out. I can see we're actually doing very well on time. So we will be done with our entire program by 12:30, latest 12:45. So don't go anywhere. Maybe just stand up and stretch, grab something. We'll have a few videos that will be running live. We come back. Guys, we've had the theoretical element of this. How has the capital markets actually worked? For a live case study, somebody who came to the market in one day, it was almost 700% price gain. What was the story? What was happening? That's what we will discuss. And then your questions, that's the conversation we want to have when we bring our presenters for the day back into the panel discussion. So we take a short break, and my colleague Viola will be sharing a couple of videos just to keep us entertained for 1.5 minutes, stretch, come back, and then we shall either start or finish off with Kanye, but he will have a special number for you when it comes to SMEs and the capital markets. Over to you, Viola, and see you in a few minutes.
and install the Nairobi Securities Exchange app. Here you will get market statistics, personalized notifications, financial news, and choose your broker online link or broker app to trade from the NSE app. Start your investment journey and keep getting regular updates on the app. The Nairobi Securities Exchange app. Investing goes digital. Investing has now gone digital with the Nairobi Securities Exchange application. To get the app, go to your Play Store or App Store. Download and install the Nairobi Securities Exchange app. Here you will get market statistics, personalized notifications, financial news, and choose your broker online link or broker app to trade from the NSE app. Start your investment journey and keep getting regular updates on the app. The Nairobi Securities Exchange app. Investing goes digital. Investing has now gone digital with the Nairobi Securities Exchange application. To get the app, go to your Play Store or App Store. Download and install the Nairobi Securities Exchange app. Here you will get market statistics, personalized notifications, financial news, and choose your broker online link or broker app to trade from the NSE app. Start your investment journey and keep getting regular updates on the app. The Nairobi Securities Exchange app. Investing goes digital. Investing has now gone digital with the Nairobi Securities Exchange application. To get the app, go to your Play Store or App Store. Download and install the Nairobi Securities Exchange app. Here you will get market statistics, personalized notifications, financial news, and choose your broker on.
Real estate investment trusts generally own or manage income-producing commercial real estate, whether it's the properties themselves or the mortgages on those properties. What types of real estate investment trusts are provided for in Kenya? Development Real Estate Investment Trust, or D-REIT. These are real estate trusts that are principally involved in development and construction of property for sale or rent. Return as sales proceeds. Income Real Estate Investment Trust, or I-REIT. a real estate trust that is principally involved in development and construction for sale or rental. Characteristics of REITs include pooled monies accumulated from many investors looking for a diversified real estate portfolio. Listed rights may be sold in an initial public offer. Restricted rights are made to specific groups of individuals meeting certain thresholds, such as being a professional investor. The aim is to protect the public and ensuring that only a certain threshold that meet the criteria participate firsthand.
Welcome back everybody. So our next presentation, I think Vida had done a very good job of introducing Vasu, and I'd like Vasu to unmute his mic and also his camera. Yes, we can see you, Vasu. Maybe you can just, lower your laptop a bit so we can see your full face. Fantastic, fantastic. So Vasu, you take it away. Thank you.
Is it okay?
Yes, we can hear you.
Good morning, everybody. My regards to the dignitaries present at the forum, and my special thanks to CMA and NSC for giving me an opportunity to participate in this forum.
Sorry, Mr. Vasu, we can hear you loud and clear, but maybe you can accommodate us and flip your laptop towards you so that we can get a full screen of you. It's as though we are taking a passport for fantastic. Thank you so much. Please go right ahead, Mr. Vasu.
Is it okay?
Perfect. Thank you.
Good.
Right.
My name is Vasu Abotula. I am the CEO of Nairobi Business Ventures, an SME listed company at Nairobi Securities Exchange. I'm basically a finance and accounting professional and held managerial positions in various industries. I always had a burning desire to be an entrepreneur. And after working for more than 2 decades, I got the opportunity to do that. Since I'm not a wealthy investor, I chose to start as an SME together with few like-minded friends of mine. I started this journey of SME business. We came across many problems to finance our business requirements as a private company without collateral securities to secure sufficient bank finance and even private finance. At this stage, I started setting up my first SME in 2010 with a small restaurant, and by 2012, had 4 of the similar restaurants. During the year 2012, we started NBV as a small shoe distributor and soon became a retail chain with 4 outlets. When the gem segment was introduced at NSE for SMEs to list with a minimum capital of 10 million shillings and a 1-year balance sheet, we realized we already meet this requirement. Then we thought of it is advisable to proceed with listing our company and prepare for that. Then we started structuring our company to meet the requirements of corporate governance, transparency, professional board composition, etc. It took time, but during 2014, we approached NSE through our nominated advisor. It was a tough and long journey before we rang the bell in June 2016. During the process, we learned a lot about why the stringent norms were put in place before listing a company. It is to protect the public money and their trust in listed companies. To protect the interest of its shareholders, NBV did not give up during the tough times it faced and bounced back as a much stronger company today. NBV is one of the best examples in Kenya for the benefits of listing at capital market. Though NBV was a growing and profitable company for the first 4 years of its business due to external situation and economic downturn in the country, virtually stalled its operations and lost many of its assets. Its main asset, which attracted a strategic investor to revive this company, is its listing status at NSE. An SME surmounted all the difficulties because of its listing status alone. This is where the other SMEs, we can be a model for them. What will be the greatest advantage if they come onto the capital markets? Now, is it really difficult for SMEs to enter capital markets or list their companies? My answer is no. NBV was a small retail chain to sell leather shoes and accessories at the time of its listing. All you need to do is to professionalize the way you do the business, your management and your board structures, be transparent in your dealings, and follow good corporate governance practices. This is what we did actually. When I was listing, the SIPUCA program was not there to handhold me. Now you have that advantage also. But still we succeeded. We entered the capital markets. So these steps of transforming your company to meet the corporate governance requirements and other things shall make you eligible for listing and also give you much needed access to finance through capital markets and support your growth and ambitious plans. NBV is a beneficiary of capital markets finance 3 times after its listing. First, when we did a private placement in 2016 at the time of our listing. When the business was going down and the working capital requirements were really tough to procure, we have taken a route of convertible note during the year 2018. And again, we benefited and surmounted temporarily for the purpose. But still the business environment was not looking up. Then finally, we decided to invite a strategic investor. And it happened during November 2020. This was a large-scale investment from a large corporation. And now NBV may no longer be an SME further because of attracting the large investment and large-scale investor on the board. But this journey of mine, which is a showcase model for all the SMEs in Kenya, not to have doubts, fears, or hesitation to come to capital market. Because the traditional conventional financing type of bank finance and all those things, the difficulties, everything, I don't need to explain, everybody experiencing on their own. Capital markets is a product where it will be the future of all the business entrepreneurs who have ambitious plans there to fulfill their dreams and all those things. So finally, I encourage potential SMEs to partner with NSE and CMA to create more sustainable enterprises, more employment and strong economy for Kenya. This is the brief speech I can give, but I'm not here to sell my product or anything, but I am present here just in case if any interested and potential SMEs would like to know anything from us or from our journey or the difficulties we faced. I'm ready to answer those questions. So now up to the David.
Thank you, Mr. Vasu, and that's a good story to have. It's a good story to listen to, and I'm sure most of SMEs who are still online and with us, they can share to the realities of how the business cycles can affect and how you can come out of those. Possibly you're looking from at NBV as a company that has moved from a small shoe outlet or shoe store to now possibly a large cap company. And of course, that's tremendous growth. And just utilizing the capital markets to achieve that is commendable. But I have a question for you, Mr. Vasu.
Yes.
What if you look at the current businesses, especially family-owned businesses, and we have had challenges, just encouraging some of these family-owned businesses to utilize or to exit to the capital markets so that they can take the business to the next level. What gave you the courage to use the capital markets to bring your business and also, at the risk of, what they call dilution of ownership, and allow other investors to come in and help you get to the next level?
In my case, it is different because I'm a very senior finance professional, worked in listed companies as a senior manager, and I know in and out of the capital markets from way back from India. And I know the Bombay Stock Exchange, which is very vibrant, and it is how grown it is. So that way, I have full knowledge of these things in advance. So only thing was that we didn't have enough finances, to start a business, prove the performance. I started this NBV in 2012, but until 2014, we are still preparing the company. Company was doing a good business, but at the same time, we need to pull up all the resources, change the structure suitable to capital markets. Since I'm a chartered accountant from India, I'm a CPA in Kenya. I did my law graduation, commerce graduation with vast knowledge. I can even advise other business houses. So that was my position. But not everybody require all those things, because you have transaction advisors. So first with CBA Capital, then with ABC Capital, they all helped me a lot. And NSE itself, they almost behave like a transaction advisor, and they hold your hand. I experienced it. It was my personal experience. Particularly, I have to thank Jeffrey a lot. So with their support, suppose when we have issue with the regulator, that is CMA, NSE used to accompany me together with one of their managers, and both of us used to go and explain our situation and our position to get this listing done. So that way, now Kenya also has almost complete infrastructure, and from this forum, I realized there are other people like this Fejesha and the now the lady spoke to before me, the Kenya. Yep. All these facilities were not known to me even before. Now, with so many people taking you very easily to the destiny. So that's why my position I explained to you. I'm aware of capital markets almost from 1990,
Okay.
3 decades of experience.
Okay.
But not everybody requires this, because there are experts in the field. Now you have seen how many in the forum that who are all taking these SMEs to where they have to reach. Because millions of SMEs registered or unregistered, whatever, they have huge potential, to raise finance.
Okay. Fantastic. Thank you so much, Vasu. Over to you, Mida.
Mr. Abutola, I absolutely admire your tenacity, your patience, as well as your humility. Because I can hear you talking about your story, and I hear Kanye asking you the motivation behind joining the capital market space. But I must be allowed to just applaud you, because in less than 2 weeks, you moved from being a share valued at 0.49 shillings per share. And when you got your new investor, the value moved to 5.33 shillings per share. I think that must be one of the best performing stocks on the NSE today. And the essence of the capital markets is, if you actually open up yourself, you can actually get access to new investors who, when they inject capital into the business, then you're able to unearth the value of all the work that you've been doing before. Mr. Abutola, I hear you saying, as an entrepreneur, you worked for 20 years, then you came together with 2 friends, you started different businesses, then you got into the Nairobi business venture business, and now finally got into the year 2020, having restructured over 2012 to 2014. Why did you decide that you wanted to be patient for almost 10 years, 6 years to be precise, in terms of building your business? And how did you know that I'll keep building and one day I will get an investor? And in so doing, then what was your motivation? What was the clarity in your mind that you said, it is only the capital markets that will allow me to get to the value I think my business is worth? Over to you, Mr. Abutola.
Yeah, that's a good question. But I already explained to David the same thing. I know them very well, but I have to pull up resources. Not only that, even when GEM segment was introduced at NSE, still even NSE and the regulator CMA are also making few changes. It's like a trial and error. So it was not that easy. Which process now you can very easily get into Ibuka, and from there they themselves will take you for listing. But in my case, it took very long period of time to correctly structure our business. And first we started as a private. I told you that with my friends I started. So that means it's like a family or a friendly business. So then you have to professionalize it completely. When I listed, my board was completely professional. There was a PhD doctor, Alfred Kitusi was the chairman. There is Simon Malonja, who is a legal expert. And there is Mr. J.S. Nagrecha, who is a practicing auditor. I myself is a finance professional. My partner, the MD of the company, Raj, was a marketing professional. So you see, almost all the departments required to run a company are there on an NBV board. So this is how we planned that anything we need, it's available in-house for us. So from there, we started the journey. Actually, if I would have all these facilities like Ibuka and all the developments which happened in last 3-4 years, I would have listed much faster and much earlier also. Because as a finance professional, when I advise companies to go and list your company, how can I run my business without listing and privately? That was the answer.
Yes, thank you so much for that, Mr. Abutola. I have a second question, because when we read about SMEs in Kenya, you have addressed the first issue, which is normally, how do I relinquish control and how do I ensure that I get good value using the capital markets? The second question is this: most businesses in Kenya today are financed by debt. So people prefer to just go and take debt and be levered and load up debt on their balance sheets. From where you sit, I know you are in the finance industry, you are a finance professional, yet you decided to go the equity route. What message could you actually give to SMEs in terms of equity versus debt in building a long-term business? Over to you, Mr. Abutola.
See, if I speak the truth, all the banking industry and private equities, everybody will be up in arms against me. But if you look at what is happening in the financial world, and the companies are really fearing about the debt burden today. One of the number one and largest company in India, Reliance, is now a zero borrowing company. So why they went out of borrowing completely is because when business is going down, you have seen so many examples of big retail chains and banks happened in Kenya. They were almost down and there is no possibility of even reviving them. Why? Because they are private companies. So except debt and asset, there is nothing for you to compare. My only asset was a listing permission at NS. So this is how I clearly give a message that don't depend too much on borrowings. I'm not discouraging borrowings, because in the beginning, without some financing, some funding, where will you go? So go to some extent, you borrow the money, show to the market that you are a successful business, and then slowly the debt equity ratio, what you need to maintain, you must maintain. And then these people's fears of losing control, what is there to lose the control? When the complete business, which is running in billions, and they all collapsed just because of that. So in what way your controlling interest has helped you? You could not revive. I will just give you one example. You take our supermarkets, what happened with them? A listed supermarket is still alive and the unlisted supermarket is dead. Practical example happened in front of you, but there were billions of empires before. What happened to them today? So there is nothing like, you protect the company and its shareholders, not that your personal control of the company, what way it is going to help when the company went down completely. So you have to be together with people. Now I'm happy, 680 shareholders I have in NBV. I started with just 7 people. That support has took me to this level now. We are entering the big league, so very soon we might even join main market segment. You see, just like equity was a large scale model, NBV is a small scale model, but we are taking the same path.
All right. Thank you so much. Can I ask maybe one other question on liquidity? So you do say that you started with 7 shareholders, now you have a myriad of shareholders. For the current capital market transactions where you admitted Delta as part of your shareholders, did you identify, how did you use the capital markets to get a pool of investors? And would this have been available to you if you are not part of the capital markets platform? Over to you, Mr. Abutola.
Certainly no. I wrote in my speech also the same thing. Because I am a listed company, this foreign investor who had a lot of interests in manufacturing and other trading, importation, so many large-scale investments in East African region, they were interested, they wanted to expand their base. And they are looking for a platform where it is, they wanted to enter the capital markets, not that, they are sitting in Dubai, they can't raise bank finance in Kenya, just like that. So they want to come here and show their performance to the market, then they might approach the shareholders or general public to participate. So this is how it's a good path, So it is a proven path.
Fantastic. It's a good path. It's a proven path. Maybe you can leave us with the parting shots unless my co-moderator Kani has a question. Kani, do you have a question, or we can take a parting shot from Mr. Abutola to SMEs?
We'll be happy to listen to the parting shot from Mr. Abutola.
My final word is like this. Finally, I encourage potential SMEs to partner with NSE and CMA to create more sustainable enterprise, more employment, and strong economy for Kenya, because everybody must be a patriot in doing these things. And my advance wishes for Christmas and New Year. Thank you. Thank you all.
Thank you very much.
This opportunity.
Thank you very much, Mr. Abutola, for sharing your experience, opening up our eyes and showing us the way when it comes to unlocking access to finance for SMEs through capital markets. So certainly all our best wishes to you, and we cannot wait to hear and see your new ventures coming to the capital markets platform. Well, I don't know how to add anything more after that. When Mr. Abutola speaks, it feels like that needs to be the end, but it can't be the end. Now we want to get into our final segment for today, and you can see my excitement over what we have been discussing earlier today. Now, our final conversation for today is a round of a panel. We have our earlier presenters sitting with us for a panel discussion, and we hope to finish this by about 12:30, so we ask that you continue to bear with us. But this particular segment is really for you, ladies and gentlemen, where you come in and ask us. So you've heard from participants, people who've been able to walk this journey. You've heard from associations what needs to be done. You've heard from affiliations or entities that are affiliated with the government in terms of how can we be able to put our best foot forward to help you with scalability, help you to access grants. In other words, there are numerous opportunities for you as an SME. Now we want to spend the next 30 or so minutes speaking to a round of panelists, and our panel discussion based on the presentations will be made up of Mr. Geoffrey Odunda, who is the Chief Executive of the Nairobi Securities Exchange, Mr. Jobon Johi Mureithi, who is the Head of Policy, Research and Advocacy, Ms. Esther Ndeti, who is the Executive Director for the East Africa Venture Capital Association, Ms. Patricia Ithao, who is the Director for the MSMEs at KEPSA, and Mr. Daniel Aderetti, Head of Credit, Risk and Compliance at Pesesha Limited. Ladies and gentlemen, I'll ask you to stay close to your computers, and we will follow the order of asking for your initial presentations or a rejoinder, if you may, based on the earlier presentations. Then my colleague and I will be able to ask you a couple of questions and then also look out for our social media platforms to see what questions are there. For your benefit, the order of our question and answer session will start with Mr. Geoffrey Odundo, followed by Mr. Job Wanjohi, then Esther Ndeti, then Patricia Ithao, and final but not least, Mr. Daniel Adereti. Now over to my co-moderator, David Kani, to start us off on this panel conversation. David, over to you.
Thank you, Mbide, for that introduction. And thank you, panelists. I hope all of us, all the panelists are there, and so that we can start the panel session.
David, excuse me. Yes. David, could you ask them to, and whatever, start my video, because I think
David, just in terms of guidance, so we'll ask for all our panelists, we shall ask that you start us off by giving us your initial comments. So we've had introductory comments from the Capital Markets Authority, from the Nairobi Securities Exchange. Then we've had the SME sector presentation from KEPSA, from the Kenya Association of Manufacturers, from PEZESHA, from the Kenya Industry and Entrepreneurship Project, and from Mr. Vasu Abutola. So we've had presentations from all these individuals. Now, as we get into our panel discussion, we would like to start with what is your rejoinder, or rather, what is the call to action, bearing in mind that today's theme is all about unlocking access to finance for SMEs through capital markets. We'll start off with a round of opening remarks, and we will start with Mr. Geoffrey Odundo. I can see that you are ready. Then we'll go to Job Wanjohi, Esther Ndeti, Patricia, and Daniel, and myself and David will be able to call you up to unmute your mic and to show your video. Let's start off with the initial remarks from Mr. Geoffrey Odundo, who is the Chief Executive Officer of the Nairobi Securities Exchange. Over to you, Mr. Odundo.
Thank you very much, Mbite and David. First of all, to thank all the presenters for some very excellent presentations made today. It has sort of given us a very clear reflection. I was very delighted when I could hear some of the presenters speak about the GEMS market and how they understand it, and how these can help improve or attract companies into the exchange. So really the knowledge sharing is coming alive. Delighted to hear that from Patricia and Felix Wakiyaga about how we can be able to improve interest in the market. I think the presentation has been extremely rich, and it's really brought out the real concept of why SMEs play a role and how can we tap into that. I was very happy to hear feedback about the demand needs of the SMEs, how they are structured, how to address some of their funding needs. And that has brought out the real essence of this presentation on how we can be able now to tap into this particular market and be able to provide more insightful support. I think on the part of the NSC, we want to just commit ourselves to provide this opportunity, make it very real. I'm happy that you've heard from one of us, Mr. Vasu, and how he's been able to bring NBV to where it is today, and now it's best performing stock possibly this year. You also heard about from the CMA about the Chinex market and really the impact it has made over 800 companies. And so we can be able to take that direction. We already have a very clear SME MOU with the Shenzhen Stock Exchange, and the learnings we have there are extremely rich. So I know we did provide very insightful thoughts earlier on, but just as a top up to those conversations, I want to just further reinforce the fact that the market is available. We have provided very attractive incentive structures, primarily for companies that possibly have great tax arrears. You've got a 2-year tax remission that you can, a penalty on remission and arrears if you come to one of our markets. And you see, we are providing that continuous incentive structure for you to access the opportunities for capital. Now, NBV has provided you with a clear test case of how a company that was having capital challenges can attract a very huge strategic investor into their business and totally transform the business going forward. And really the asset they had, as Mr. Vasu has said, was their listing status. So that's a very good confession, Mr. Vasu, and thank you for being very honest about that. The listing status is an asset that you can actually be able to price out to an investor, and that's what you've seen with the case of Vasu. Now, these stories we're giving you are real, and they've happened. We've seen a high level of wealth creation, a high level of capital of price discovery for companies. Companies have been able to access capital period on period, based on their good listing stories and their equity journeys. And so coming to the market is a possibility. You just need to commit to a very strong governance structure, have a clear story, have a good business model, have an attractive offering to the investors. But one thing that the investors really look for is a good corporate governance structure. That's the basic minimum, or what you call irreducible minimum, that any investor would look for, because that guarantees sustainability and success of the companies. So I'll probably pause there and wait for the panel, and then take it from there. But I'm really happy, and thank you very much, everybody, especially the presenters, for really, really great presentations. Thank you.
Thank you. Job?
Good morning, good afternoon, everybody. I have to say that the session has been quite thought-provoking. A lot has been discussed, a lot has been shared, and I'm feeling the imbalance between the potential that lies within and the information that has not trickled to the ground for people to take advantage of this. So I'm feeling that going forward, we need even to have probably sector engagements, coming and discussing this specifically, the manufacturing sector, getting to the service sector, and many other sectors that we have in the economy, so that this information can trickle down, because I'm looking at like now eligibility criteria for listing at a gem. You find it is as easy as throwing a stone 1 meter away. You find we're talking about a company that is registered with the Companies Act. We are talking of the capital crowd is about 10 million. Talk about the shares that one, the minimum shares that one is required to have. Talk about the governance issues. All this has been discussed, and information that is really coming out is quite insightful. And I'm feeling like what I've said, underscoring again, let's have sector discussions so that now these sectors can really understand critically what the potential lies within these. This is an area that has not been concentrated on when we're having policy discussion at the national level. When you have a special discussion with the SME, you find that mostly we talk about grants, we talk about loans, we talk about financial support, probably through skilling and whatnot. But rarely will you find that in the boardroom or in that group discussion that the capital market is featuring. So it's a question of the information trickling down, because from where I sit, I've seen very great potential. Thank you so much.
Thank you so much. That was Mr. Job Wajohi Mureithi, who is the head of the Policy, Research and Advocacy at the Kenya Association of Manufacturers. Ms. Esther Ndeti, who is the Executive Director for the East Africa Venture Capital Association, is back with us. I'll ask you to unmute and put on your camera and give us your rejoinder to the introductory remarks from this morning and the SME sector presentations. Over to you, Ms. Esther Ndeti.
Thank you, Mbitha. Thank you for having me this afternoon. I just think I'll make a quick comment with regards to, I think this was a question asked earlier today, what is the funding gap for SMEs in Kenya? Well, I don't have the specific number for SMEs in Kenya, but I do know there's a $90 billion funding gap for small and medium-sized enterprises in Africa. And when you look at the private equity sector, out of the total funds raised globally for private equity activity, less than 1% makes it to East Africa, is earmarked for East Africa. So, the most promising source of capital for PE and VC funds should be local domestic institutional investors. So as the EAVCA, we'll continue working hand in hand with the, with the local authorities and the CMA and various organizations like the RBA to ensure that we can unlock that capital from our local institutional investors. And, that way we can channel more funds to SMEs here in Kenya. Then looking at the exits market, generating exits allows PE funds to return capital to their investors, just to show that their investment thesis is valid, and then, return to the market with more funds to invest into more businesses and create a track record showing that, Kenya is a viable investment market. So, we're keenly looking at how we can work closely to incentivize, businesses and PE firms to, list the businesses on the stock exchange, and, work to solve the impediments and the challenges that they're currently facing. And that way we can unlock more capital and have more track records in this market. So, we work together with the various associations to raise awareness on what private equity is and what venture capital is and the opportunities that lay there. And I hope we can discuss more about this on the panel discussion.
Thank you. We can have Daniel.
Hello, again, thank you very much for this grand meeting. I think Mr. Job mentioned it properly. This has been a very nice compendium of information for the broad range of MSMEs that we face in Kenya and all over sub-Saharan Africa. I think from our own perspective, the major thing we're trying to explain, two things especially, is we want to contribute to the capital markets, and the capital markets in itself can be as broad as possible. And we feel like crowdfunding models, for example, can participate in this space, especially because we do democratize what fundraising looks like for MSMEs. And if you can have a process by which you can automate whatever process of investment analysis you want to do, you can actually prove that it's a model that can work, which is something that we have been able to prove in Pezesha in partnership with the CMA. And it's also very interesting what Mr. Geoffrey also mentioned. One of the biggest things we're actually very interested in is corporate governance. So whenever it is we're talking to whatever SMEs we want to fund, we always want to know what decision makers are. And that starts with us, essentially. So we had to rethink, what our corporate governance policies look like before we decide to put it out there. So if you combine these two things, access to financing and making sure that the financing itself are being used for the purposes they are meant to be used for, we can actually create something beautiful in Africa. And it's very interesting for us to see a group of associations, individuals, organizations like us, and regulators that are participating in these markets interested in building the scale as much as we think we can go to. Thank you very much.
Thank you, Daniel Deretti, who is the head of credit and risk at Pezesha Limited. Patricia?
Thank you so much. I think my comments are going to be very, very brief. The opportunities that do exist, as have been shared this morning, are very, very exciting. But for SMEs to access them to help bridge some of their finance gaps, we have to start looking at how we ensure that they fix the barriers that will hold them back from taking advantage of opportunities, for example, such as the GEMS product. This whole area around informality, we have to make sure that SMEs can start to embrace that and not see it as a problem or as an interference or as a cost. I think these are some of the mindset areas that we have to resolve for SMEs. And in doing that, I guess, try and look at why do they want to be informal? If it's a question of the costs, really trying to bring on board parties who are able to support them in different ways. Because one of the challenges, as you know, is for getting a little bit more formal, there's always a cost involved in terms of when you're trying to make yourself compliant. And these are some of the areas that we're trying to get our membership to start looking at and seeing how could they start offering more preferential rates, terms for SMEs, so that, it works, it becomes a symbiotic relationship, because then these members then have the business, but also you're supporting somebody else continue to do business, and that way things continue. So, and the other thing is just the awareness, really driving the awareness of these opportunities becomes another area that we have to see how with forums such as this or any other forums, we can continue to drive the awareness and the explanation and the support to allow SMEs to participate. So I think for me, I think this is the time. We need to drive the sophistication of our SMEs a lot more. And if we're able to find ways to take care of the challenges that hinder the uptake, then I think this is a great way, and the future is very bright going forward if we could. Thank you.
Thank you so much, ladies and gentlemen, for that overview. And it's interesting to see that we all appreciate that we must get to the next level at SMEs. There's a lot of work that needs to be done. Each and every person who's been part of today's forum is pertinent in moving this conversation forward. So we will start off with a set of questions, just for benefit as part of our panel. We'll start with Mr. Bundo, then relay questions to Job. Next set of questions will relate to Ms. Esther Detti, then Patricia, then Mr. Daniel Arderetti. I'll start with you, Mr. Geoffrey Bundo. As the Chief Executive Officer of the NSE, today we've been talking about SMEs and unlocking capital to SMEs. We've had different definitions of SMEs from SMEs. When it comes to the capital markets, how should we define SMEs? And in other words, who is that SME we are looking to and trying to define, and what kind of capital can possibly come there? Over to you, Mr.
Thank you, Mbithe. I didn't get the last part of your question. I think there was a bit of feedback coming through. But I think the definition of SMEs, I think it can be very varied. And it's probably still a very big conversation of how do you define them. You could find a corporate organization that defines itself as an SME, depending on probably what the kind of size of the asset base they have. Some define them based on number of employees they have. So it's very, very varied. But I think the general definition is that primarily these are organizations of how we define the NSC, who possibly have an asset base of between 500,000 to 10 million as SMEs. And so we've created the criteria based on that, that parameter. But I believe that it could stretch even to larger companies or even up to 20 or even close to 50 million, because as you start up, you're basically starting up as a family-owned business, as a small entity. It could actually be in a sector that requires a large capital outlay, but you're not necessarily of a size that can be considered mid-corporate, for instance. And so that can still remain a very big conversation out there, but it's not really the important part of it. I think the more critical part of it is really how can you then take advantage of the incentive structure that have been put in place for companies that are considered SME. One of the things we've done with the GEMS market, we've actually opened it up even for very large corporates, because we are saying your entry into the market can take various routes. So if you feel, for instance, you could be a large corporate with an asset base of 100 million, but you don't have say 50 shareholders or 100 shareholders or 1,000 shareholders to go into either the main or the AIMS market, you could still come to the GEMS market, because the GEMS market then requires you to have only 25 shareholders. And so you could be a large company, but the GEMS market solution, which is targeting SMEs, can actually fit a large corporate organization. Capital requirements, again, so the structure we have for profitability requirements under the GEMS market is a bit more accommodative for companies. So it could be your entry point into the capital markets, but very quickly you're able to move up into the higher segments. Now, when you access the equity market, when you access the capital markets, you're not only looking for equity market financing, but you're also looking for even debt financing through the bonds. We have got a bond market, as I showed it earlier in the platform. And again, this is a much I would say, a competing debt solution, because bonds are basically, for a long time in our market, were basically unsecuritized lending instruments. It's now going through a securitization format again. But what it does is that it has an overriding benefit over and above a lending from a financial institution, in that you don't require security. You're basically based on your balance sheet strength and your cash flows. And if you have a very good business and the model, its success is actually very exciting, you'll basically be able to attract funding for that kind of opportunity. As I said earlier, in the real estate sector, if you're looking for investing into real estate, again, you can partner with investors in this area through a REIT platform. So the solutions that are open to you once you come into the capital markets are really, really immense. We successfully even listed a green bond this year. Again, sustainable. If you're in a sustainable business space, that's a great opportunity. International investors are looking at our market, and again, you don't have to use your balance sheet or your assets rather to borrow. And so, just to speak about it, I think when you come in, we can actually be able to take you through a great, varied opportunity of financial solutions for you to access capital. Now, the other key benefit that we provide here as the capital markets is really, besides just offering you financing, is now the helping you improve the governance and the operational framework of your company. Now, this is probably not what you will get, and I'm sorry for speaking about the banks again, that you'll get from a bank. A bank would not like to, would not necessarily spend money to put you through corporate training, corporate governance training, and that kind of thing. But naturally for us, you cannot access capital from our markets if you don't have a strong governance framework. And so we will take that effort to take you through that process, And so our aspiration is to make sure that your business is strong and profitable, such that when an investor assesses or carried out a research about it, it can sell, and the story can sell. And that's probably what you will get on the other side of the financing ecosystem. So that's what we're looking at. The other final one, as I mentioned earlier, for technology companies. Now, we are looking at how we can be able to help such startups access capital by coming up with a unique board. And we're looking at a thematic board that will be for technology companies, because that's a great opportunity and a very attractive asset class for international investors. So again, this is an area that we're looking at, and solutions to address that are in place. So I don't know whether I've answered your question, Bide, but it's a very exciting discussion that we're having, and I'd like to also hear views from my other panelists. Thank you.
Thank you, Jeff. Thank you, Jeff, for those for your remarks. I think spot on. I mean, there are a lot of opportunities, and I think from the team and from the presentations that we've had across the entire morning, I think the capital markets offers certain remedies or certain solutions that we need to pick up from here. I'm seeing a proposal here from someone called Gerald Morioki saying we should change the GEMS board to call it the SME boards to resonate more with the SMEs. I'll jump on to Job and probably just Job in line with Big Four agenda, and of course from the manufacturing sector. What are some of the business opportunities that are emerging, and how are you primed to pick up some of these opportunities and leverage them through the capital markets?
Thank you so much, David, for this question, also for this opportunity. You have asked a very pertinent question around the Big Four agenda. Indeed, this is one program that we have been following up on quite persistently for the last 2.5 years. Within, we have seen some gains as far as the policy space is concerned, because the government has been looking at how it's going to improve the policy space, talk about the fiscal issues, talk about the trade policy issues, talk about industrialization issues, policy issues. There has been vibrancy in discussion around that area, so that now we can take up some of these opportunities that you're talking about. Like now in the Big Four, there is identification of about 7 or 8 sectors, and I'm going to mention a few of them. We have like now textile and apparel sector, whereby we are looking at not importation of the raw materials and the intermediate products into the manufacturing of textile and apparel, but looking at how we can have cotton to fashion value chain integration in the country, so that along that value chain there are various jobs that are being created. Because you find that there are 4 or 5 steps that have to be undergone in value addition from textile, from cotton up to when you're making an apparel or a cloth, or where you're talking about the fashion industry. So along that value chain, you find that at the moment a lot is missing, but going forward, we are likely to see an uptick of the same. If you're talking of, like now in CAM, we have developed something called a textile and apparel paper that's looking at how, like now we have scooped through the jobs that are in the EPZ industry. They're about 52,000. If we can follow through along that variation and ensuring that we're integrating instead of importing the raw materials, this one will again resort to job up to about 225,000. If you look at the foreign earning, if you look at the investment that are coming through, there's a lot, and it is in these the capital market can really come in very handy. If you're talking about the leather industry, we have seen government commitment, like now we have what is called a 10% export levy, so that we are not denying the leather industry in the country the much needed raw material that is generated from the hide and skin, which otherwise is exported in raw form, and then it is value added in India, talk of Europe, and then we have the moccasin coming back and buying it very expensively. Why can't we make it in the country? We're talking about agro-processing. We have seen also some commitments around this area. Establishment of common use of facilities. If you're talking about incentives and subsidies that are going towards the farmers, so that we can get some of the raw materials more competitively, and instead of importation of these raw materials and intermediate products. Construction materials, we have seen heavy demand coming from the EAC region. And it is in these, as I was earlier saying, that instead of now concentrating on how one is going to get a loan, how one is going to get a grant, how one is going to get non-financial support like now skilling and governance issues, how one can then come to the capital market, because like now the SME, even in the various strategy papers that we normally develop, you find that that access to credit or access to capital, talk of access to market, and also the governance issues. Those are the 3 critical issues that have been identified under the manufacturing SME. And we are looking at now the market penetration. It is really coming, and it's really easing. We're talking of the local market. We have the Buy Kenya, Build Kenya strategy that has been established. We're talking about the regional market. We have East African Community Custom Union. Talk about African Continental Free Trade Area, tripartite free trade area. Talk about the negotiations with the US around free trade area. The completed negotiation with the UK, so that we don't suffer under the Brexit 1st of January. So as far as markets are concerned, we are quite aligned when you're looking at how we can penetrate. The worry was, where are we going to get the capital from? Because like even what Geoffrey is saying, that the banks will not sit you down and take you through the governance process per se, or if you don't have collateral, you're not likely to benefit out of the credit. But now when you come to James, you don't need collateral. You could be loss-making because of the COVID at the moment, and still you're getting considered. So the various opportunities that are in the Big Four agenda, and these opportunities through the supply chain integration from the market, coming back to where the production is happening, capital, it was one of the impeding factor. And through the capital market, we see some solution in it. Thank you.
Thank you, Job. And I allowed you on some of those comments that you've just made. And just looking at the recent partnership between the UK and Kenya, and some of there's been a lot of bilateral agreements that have been signed off, especially on increased bilateral focus on agro-processing, textile and apparels, leather and footwear, metal and allied, chemical and allied, pharmaceuticals, medical equipment, plastic and rubber, light engineering. All these are opportunities that are available for our SMEs. But of course, some of these opportunities will require heavy funding or through market-based finance. And I think that is where the nexus between your members and also the capital markets, that's where they meet. So I'd like to invite Patricia in the next set of questions. In terms of loss of value are seen as one of the main challenges by SMEs that would want to access the market through public offering. In your view, how would the SMEs unlock value of their companies without worrying about dilution or loss of control?
I think my answer will be very brief on that one. And that is to say that SMEs actually need to understand that public offering exposes the business to more capital and opportunities for growth, not loss of control. So it's a question of a mindset shift and seeing it from that perspective. They may see part of the business and control, but in the end, it is a question of seeing the value multiplying and you as an entrepreneur earning more income. And that's what we need to get them to start to understand and the perspective they need to see. And this is not to mention the positive public image and the ability to liquidate their holdings anytime. I think our advice to SMEs is to take the opportunity once it presents itself and continue working towards building the business value through innovation, credibility, and compliance with the laws.
Thank you so much for that overview, Patricia. But from where you sit, Director of MSMEs in Kenya today, and having gone through COVID-19, which has had a financial impact, especially on working capital as well as long-term funding needs, do you see a short-term opportunity where the businesses that you engage with on a day-to-day or at least on a regular basis can actually now follow the trajectory of the story that we've had from Mr. Vasu, that's the Nairobi Business Ventures, where they begin to look at Ibuka, they begin to look at the growth and enterprise market segment? Is there an opportunity, or do we expect to see then debt becoming the primary financier in the medium term? In other words, Patricia, what immediate actions do you possibly see, or points of integration or points of partnership from where you sit today and the opportunity that the capital markets provide in unlocking capital for MSMEs? Over to you, Patricia.
I think for me, one of the most exciting things that has been shared today and which has been expanded on quite a bit is this opportunity through GEMS. And as I've said, we really fully support that and the benefits that come with it, including some of the thoughts around, considering tax arrears and penalties being offset or not taken into consideration, and that amnesty allowing a lot of these SMEs to clean their books so that then they're able to access some of these things. Because one of the biggest areas that SMEs have is suddenly now when they're exposed, they recognize that they have to clean up and have everything formalized, and they can't even fathom or imagine the implication of things like tax or things that they've not done. So I think for us, when we start to drive this opportunity around the partnership, it's really around driving that awareness. It's really around creating the capacity and the training and the understanding, because once somebody's aware, the next question is, yes, I know what you're talking about, but how do I get around to doing it? So with all the programs that we have, building that capacity to allow them to improve their financial literacy, supporting them in how they can build a stronger governance structure, and all those areas, then that means that when they're looking to do this, they're coming with their eyes open and knowing what is the implications of what they're doing, and therefore give them the comfort that they're not ceding control, they're not exposing themselves to more liabilities. All they're doing is actually looking for an opportunity or seizing an opportunity that can only grow them exponentially.
Thank you so much for that overview, and I can't wait to see this partnership as well as the fruition of this. Now let's go to Ms. Esther Ndeti, who is the Executive Director for the East Africa Venture Capital Association. Esther, I want to talk to you about capital because you do engage with the venture capitalists as well as the private equity money, which is largely foreign, and as well as the local component. When we look at your relationship in terms of where you sit in the capital markets, can you comment in terms of the list of impediments to IPOs? Because we do hear of transactions happening in that space, but we don't see them coming through the capital markets. Or in other words, based on the transactions that you see, the opportunities that you see, is there anything that possibly can be done by the capital markets just to be able to unlock that flow of capital from the capital markets to the business opportunities in the region? Over to you, Esther.
No, I think, thank you for that question. I think some of the impediments or other challenges have been already mentioned, but I'll just repeat some and maybe add a few. So, some of the key challenges cited by private equity firms to IPO exits in this market is one, the high transactional costs paid to lawyers and investment banks, for instance. So that is probably something outside of the direct control of the stock exchange. But then that is a key issue that has been raised over and over again. Then we have the lengthy lead times, prior to be able to execute these IPOs in this market. And then we have, the risk of the stock market, the volatility of it as well, I think has been discussed earlier. Then you have the potential lockup period, a requirement for the PE firm to retain an equity position for a specific period of time after the IPO. That has, that's something that can be looked into, going forward. And just general perception issues that IPOs are usually appropriate for much larger companies as well, with attractive growth potential. So those are some of the challenges we've had mentioned. And you're asking, should we be looking forward to more exits? One of the things I should mention is, exits via public markets have been decreasing the world over, and this is not unique to Kenya only. So maybe that's and I'm not sure if it's a point of comfort or, but it's just a fact that we need to consider. For Kenya, I guess the fundamentals need to get right. One can expect more PE IPOs if we see a more vibrant market with enough investors to take up a public offer at the initial market value. And then just to be able to incentivize some of the PE investors is by maybe reducing the terms of listing. At the present day, terms only PE firms with a significant majority can afford to list via IPO because a minority share cannot be listed. And if you look at this market, most PE firms have, actually more than 90% sort of have, minority shares into the funds that they're investing into. So that in itself is a barrier for a market where many PE firms, have the significant minority stake. So maybe that's a potential incentive to look towards to as the stock exchange is analyzing how to get more PE to participate in the market.
Thank you so much for that clarity. So let's get our next panelist. That's Mr. Daniel Aderetti, who is part of the Possession team. So Daniel, in your experience, you've already come up with a platform for crowdfunding SMEs with ticket size that vary. And I was actually able to look it up yesterday, and it's an interesting proposition. You've also been able to depict the amount of funding and the funding gap that you possibly see in terms of SMEs. And your experience also comes in from similar platforms that have worked in the West. When you look at Africa today, when you look at the work that the capital markets is doing today and the different conversations that we've had today, then what is the way forward in terms of leveraging on technology to unlock access to capital for SMEs using the capital markets? Over to you, Daniel.
Fantastic. Thank you very much for that question. I think the way I would likely answer that is in talking about all the participants in the capital markets in itself. And if you start from the very beginning, you have investors, you have individuals like us that allow investors to invest in guys that we call eligible MSMEs. So each of these individuals have different levels of financial technology platforms that they can actually work with. So let me talk about the sophisticated investors first of all. An example, if you're an investor right now, is you do have platforms like Pesesha that allows you compound your savings. So you can actually literally use part of your income that you're not using to invest in markets or MSMEs that look like things that you want to put your money into for a particular return. And the beauty about doing that in Africa is, apart from just the commercial return that you're going to get, there's obviously impact that's attached to it. So you can imagine investing in a Mama Burger, for example. That's something that you should be proud of helping our move from 1 employee to 5 employees. That's something you could be able to attract your name. For individuals like us, I think financial technology has been very useful. An example is we're very big on using mobile transaction data to do alternative credit scoring models. And that means that there is no level of bias that is being attached to your business, either gender, for example. So all you have to bring, if your business is working and you have 6 to 12 month transaction data, you can get funded. So that depends on what your business has looked like over time. And for an MSME, the other beauty there is you now have an easy way by which you can now record your data, right? So you literally can use your mobile phones to record what your daily sales look like right now. And for individuals like us, we can take apart those kind of recordings and make analysis of them. So in those different kind of angles, there are different form of ways by which you can leverage financial technology to use in this kind of markets. And it doesn't restrict you to a particular geography. Wherever you are, wherever you're based in Sub-Saharan Africa or foreign investor, you can actually partner with literally all these platforms that I've mentioned to invest across Africa in itself. So in the case, if you keep going on this trajectory, we see a very clear pathway by which can actually grow what the market looks like for African MSMEs.
Thank you so much for that. Looks like time is not on our side. We would have loved to hear a lot more, but I could ask just briefly your closing remarks as we come to the tail end of the day. Then we will be able to just take one more brief opening remarks, closing remarks from one of our stakeholders, then we can wrap it up. So bear with us if you are joining us via the Zoom call. If you are joining us through the social media panel, please remember my co-moderator, David Kanye, has something lined up for you. I hope you'll be able to be bold enough to sing it out, but don't go anywhere. We will be done with this in 10 minutes or less. So briefly, ladies and gentlemen, thank you very much for being part of our panel. It's a lot to process, but leave us with a call to action based on where you sit, so that hopefully if we meet you on the streets in the next 6 months, we can say, how is it going in this particular space? Let's start off with the Chief Executive Officer of the Nairobi Securities Exchange, Mr. Geoffrey Odundo. Parting shot, call to action, very brief. Over to you.
Today we've been able to share our thoughts around access to our markets, and I want to just further emphasize that access to the capital markets is very easy. It's as easy as walking into our doors. We have got advisors on the ground. We've got the CASIB, which is the Kenya Association of Stockbrokers and Investment Banks, who are the advisors. You can access us at the NSC. You can go to the CMA. We have a team that's looking at market deepening, and you will be able to get proper advice on how to access the market. These incentives have been there for many years. We are continuously looking at incentives of attracting small and medium-sized companies. The one platform that you can access and come and test your capabilities of accessing the market is through the Ibuka program. It costs very minimally to join. We provide you with a very, very comprehensive training on how to access the market, and that can be a good starting point. So mine is just to interest all of you and really call on you to come to the market. We've set up a great infrastructure. It's visible, it's accessible to international investors, and it is coming through us gives you a great opportunity to expand your business, to really advance yourself. And we've been we've incorporated our plans in the post-recovery, economic post-recovery, post-COVID recovery strategy, and we're looking at some of those incentives, especially around listing minority shares and all these other opportunities that you discussed today. So we look forward and really come to the NSC to discuss opportunities. Thank you very much.
Thank you, Jeff, for that. I'd like to welcome Job Panjohi to make his parting shot.
Thank you so much. I think my parting shot would be the same as the starting words that I issued. Basically, I'm looking at how this information can be disseminated to all the players in the country, so that they can tap the potential that comes with the capital market, because you find that access to credit has become a very serious concern to the small and medium enterprises in the country. So looking at how you can get into the print and electronic media more, how you can get to the social media more, so that this information is disseminated to each and every other Kenyan who is complaining about access to credit, and realize that now they can access the capital market. The other thing is a question of getting sector to sector sensitization, starting with the manufacturers, the association or the body that I represent in this conversation. We are most welcome as capital market to come and sensitize our members further, so that the family-owned businesses, so that the private equities and whatnot, all these can be sensitized, and then they can take advantage of this space. Thank you.
Thank you so much.
Thank you, Job, for that. As capital markets, we have an existing MOU with CAM, and would love to take your membership through some of these opportunities. And we, of course, will be knocking on your door so that we can partner in this way. Thank you.
Most welcome.
Thank you so much. So, call to action, brief commentary. As Dendeti, Executive Director, East Africa Venture Capital Association, who want to come out of this conversation today?
At the risk of sounding like a broken telephone and repeating what has been said before, I think it's really important to really get into that information gap that keeps being mentioned over and over again, and how we can sort of solve that. I think during Mr. Abutola's presentation, he mentioned how he wasn't aware of the various instruments that were out there. And I think that that is a man who was very well versed with the financial sector. So, how can we be able to have the SMEs have a full grasp for the full universe of capital that's available out there? And this is actually outside of private equity. So, is your business looking for asset-based financing or alternative debt or hybrid instruments or equity instruments? And how can we work with the different associations and industries to just make sure that information is out there and that we're continuously giving access to businesses to be able to tap into this capital? So I actually want to take this conversation forward with the participants who've been here today to just see how we can really effect that and have more capital flowing, both from outside, both foreign capital and local capital, to our businesses here, because there has been a financing gap for SMEs up to date. This financing gap is projected to actually increase given the impact of COVID and the economies from various parts of the world where we also source capital from. So what are the solutions, and how can we still make sure that businesses have access to this capital? So, I will take this up with my various colleagues on this call after this.
Thank you, Esther. Ms. Patricia Itao?
Thank you. I think everything that I'd love to say has already been said. Financing will still remain the biggest gap, and any new opportunity will always be welcome. As private sector, we will continue to support by championing the enabling policy and regulatory environment, and mobilizing the private equity capital investment teams, what has been presented today, and really continuing to partner in facilitating capacity building programs in order to make sure that SMEs can realize their full potential in every way that they can. So thank you so much for this. And I think for me, it's really to see how we continue to drive and ensure we're taking advantage of all those areas. Thank you.
Thank you so much, Ms. Patricia Shaw, the Director for MSMEs at KEPSET. Last but not least, Mr. Daniela Duretti, who is the Head of Credit Risk and Compliance at Possession Limited. Call to action, what will you be doing after this?
I think, so first off, I would like to say thank you to everyone that's participated in this call and everybody that stayed here now to listen to all of us speak and give our thoughts on capital markets in Kenya. My parting shot is going to be, we do know crowdfunding has a role to play in the capital markets going forward. For every MSME that is registered or for every MSME that is represented in this call today, it's interesting for you to use every instrument that you have available to you to try to raise available capital that is around you. So everybody that is talking today is literally giving as much information as possible for all the opportunities around you. If you want to reach out to Pesesha, by all means, please go to our website, pesesha.com, to get more information about what our processes look like. And we would always get someone to talk to you. Again, thank you to everybody that's participated in this call, and please be safe and be well.
Thank you so much. So, ladies and gentlemen, that was the end of our panel session. We have come to the tail end of this particular session. It's been a lot of hours. You have been staying with us. Thank you so much for your time, your numerous comments, and all our stakeholders. Now we have just 5 more minutes to go in terms of wrapping this up. We can't have started up with an amazing day, and a lot of meat has been shared, a lot of content has been shared. So bear with us 5 more minutes so that we can just take you through the tail end of the formal closing of this presentation. But really, to all of us, to myself, to my co-moderator, it's really, what is the call to action? So rather than being the people who just listen, what is going to be our action point? And if you are here today, if you meet any one of us, we want to be asking ourselves, after the SME Forum, come December 2021, what will you be doing? Let me hand over to my co-moderator, Mr. David Kanyi, to take us through what to expect for our closing part of the ceremony. Mr. Kanyi, over to you.
Thank you, Bidhet, for that. And before we get to the the way forward and the conclusion, I'd like to invite Nkore just to say something. I've seen you on the part of the panel.
Okay, so that's Mr. Nkore Gamba
Mabesa, yes.
The Chief Executive Officer of the CDSE. Over to you, Mr. Nkore Gamba Mabesa.
Nkore, are you with us? Okay. Oh, fine. He's here.
Mr. Nkore Gamba, if you can hear us, please unmute, put on your video.
That's a total ambush.
We cannot leave you behind. You're part of this record. Yes, we can hear you now. Yes, we can hear you, Nkore. Carry on.
Okay, allow me not to put on my video. I'm just a participant.
Nkore, I think we've lost you.
Hello, David. Can you hear me?
Now we can hear you.
Okay, great. Look, I wasn't anticipating that I'd be asked to make any comments, but thank you very much. I think this was an excellent forum, very, very intuitive, and I'd like to congratulate the CMA and the NSC for actually, it's probably I'm experiencing it for the first time, so I'm not sure if it's the first time that this has happened, but to bring all the SME and MSME enablers into one forum can, share so many experiences, that sector of economy, access long-term capital, if we all understand each other and we can align and be on the same page. So I think this is an excellent forum, and congratulations to the NSC and the CMA for putting this together. A lot has been said. The one thing that stood out for me, I would like to quote the gentleman from NBV when he talked about control of companies and posed the question, what control do you have when you're totally indebted to the banks? They're actually the ones in control of your business. I'm not disparaging banks. We all have a role to play. Everybody in this forum, everybody in the economy has a role to play. But when it comes to long-term capital, I agree with what Jeff said earlier. It's best perhaps to look at the capital markets for this sector. So thank you very much for putting this together, and all the best.
Thank you, Nkore, for that. Nkore Gamba Mabesa is the CEO of the CDSE and part of the stakeholders in the capital markets. So as a way forward and conclusion, I'd like to invite Director Luke Ombara, who is the Director, Regulatory Policy and Strategy at the CMA, to take us through now the way forward and just, just what Vida you've been asking, what next? So these are the steps that probably will be undertaking to ensure that this conversation still remains live and we get those solutions that we've been seeking from this discussion this morning. Luke?
Right, thank you very much.
Your mic.
Thank you. Please confirm you can hear me. Can you hear me?
Yes, we can hear you and you can see the presentation. Yes, we can hear you.
Okay, yeah, thank you. I'm between you and the end of this session. I'll make it very brief, probably less than 5 minutes. Just to clarify from what Nkore said, this is the premier capital markets SME engagement that I think is the first one we really have had of this kind. So mine is really just what you can take away or take home. I'm not sure which one is which, but you'll take something somewhere. Is just a brief summary of what we have agreed after nearly 4 hours of discussion. And number one, there are clear benefits of listings that SMEs can enjoy besides or in addition to capital raising. Number two, very important to remember, because there have been some issues around banking versus capital markets, but I think the message that was initially sent by my chairman was that the money markets and capital markets are complementary. So depending on whether you have a short-term or a long-term horizon, you might decide which one to use or use both. And beyond that, there are also opportunities to leverage other funding sources. I think we've been told about grants, private equity and all that. Then also important to note, CMA and NSE working together towards reducing the regulatory burden to SMEs as they try to raise capital or to list. And that was clearly manifested in the statement around corporate governance requirements or framework being tailor-made for MSMEs. At the same time, there's a review of public offers regulations. There's also an OTC platform at the NSE now. So all measures are being taken to make, to be more facilitative to SMEs. I think we should also not forget that there are several options. It's not just growth enterprise market segment. We've been told you can go crowdfunding. For a startup, you can use the Ibuka platform, or you can use our regulatory sandbox if you're fintech, or you could use the private equity space. I think the testimonials were quite touching, and particularly the one from NBV. But the message there is that market-based finance can, has, and will work for you as SME. I think this was by Kenya Kasib. Government support will be crucial as we try to bring in all our synergies together to support. But that beyond that, we also need strategic partners. We were told of all these associations: East African Venture Capital Association, Fund Managers Association, CASIB, all these present, even represented by the panelists and even those who are general participants. There needs to be a lot of further work done together. I think CAM mentioned, or KEPSA really, mentioned something about advocacy around policy, that's tax incentives, legal framework, just really to try and advocate for more incentives to SMEs. Then, of course, we also recall there were a number of legislations. We've been told about the startup bill. There's the digital assets amendment bill. We have our SME corporate governance. So there are a lot of legislations all aimed at trying to support this market that we hold very dearly. That's the SME. But there's need for harmonization of these legislations so that you don't get too much regulations or regulatory overlaps. Awareness, I wouldn't overemphasize that. I think we've been told we need to let SMEs and other players know the opportunities that are available. So that is really, I'm sure you've picked 2 or 3, and that by doing so, I'll have achieved 50% of my job. For the remaining 1 minute, where are we going from here? We've had this virtual meeting. What we are going to do is to collate and circulate the takeaways with all of you participants. We want to do it by the end of this month. It doesn't mean we are not breaking for Christmas, but probably in the next few days, we should be able to circulate that. Then we've been talking about engagement. And there are a number of things that are lined up or initiatives, and that will call for a lot of more strategic engagements. I think what was not emphasized too much was our need to set up a capital markets SME development fund. I don't have time to give the details on that, but we know that there are several other funds by different other industry players. So we need to see what component, or if there's a way we can be able to merge those. Capacity building, we are expecting engagements around signups for Ibuka. And generally, those who are ready to come to the market, we can begin talking right away, but in more earnest from January. Then there are policy gaps that we've been told, regulatory gaps. And we have an opportunity because government is currently at the end of its budget cycle, in which they receive policy proposals for inclusion in the 2021-2022 budget statement in June. So there's always a window to continue arguing our case for policy incentives. I think, again, Mr. Paul Moy talked about some preferential corporate tax treatment that could accrue to SMEs. So anything else that we really need to put across to them as our key strategic partners and as our parent ministry, we would be keen to do so. My last slide, stakeholder consultations will need to continue. We have done some work. Our board approved the SME corporate governance policy, but now we are proceeding to see whether we are going to translate that into regulatory framework, whether it's in the form of a code specific to SMEs, or maybe regulation or whatever circular will be able to come up with specific, tailor-made, less onerous corporate governance requirements for SMEs, noting that they are not as large as the other companies. Then again, that should be March, but between March and June will now be gaining momentum. And as I think my CEO also mentioned, we are reviewing the public offers and listing regulations to address any other amendments we can make to make the regulatory framework more responsive to SMEs. There's also a policy framework that has been approved by our board on crowdfunding. We are proceeding to see if we can come up with the regulations with regards to that component on fintech. We'll also be having consultations around the technology board, which Jeff has emphasized just a few minutes ago. And then how we can be able to now come up also with light touch regulatory framework to support private equity and by extension support the capital markets. Then I think we are well impressed by the level of interest by SMEs, and we welcome one-to-one engagements. And probably as I conclude, I believe your new year resolution it's normally for individuals, but now it's going to be for SMEs, is to raise capital through the capital markets and list. Thank you very much. Back to the great team of Bide and David.
Thank you so much. That was Mr. Luke Umbara, who's the Director for Regulatory Policy and Strategy. Luke, thank you so much for just articulating the way forward and summing up all the considerations for today. I would like to say it's 12 minutes past 1. Man shall not live by bread alone. All that we've had today and how Luke has summed it up, I cannot add anything. All that I can say is that as we are going into the December holidays, what will be your own individual call to action? We've heard from the Capital Markets Authority, we've heard from the NSE, we've heard from the different stakeholders over the day. What I do know is I will spend some time this December listening to Kanyo, still trying to convince him to sing a Christmas jig for me. Hopefully that will come to fruition. But aside from that, what I do know is I run a company, and now it's very clear that my medium-term plan is how do I get to 25 shareholders so that I can join the capital markets? And more importantly, how can I even challenge myself to get to 50 million in terms of turnover and just move the scale over and above just living a subsistence kind of living when I'm looking at an SME, but actually growing it and aspiring? I truly feel like I've gotten so much today in terms of being an SME, being part of the capital markets, and I've gotten so much in terms of what I can do as Mbithe Moema. That is my call to action. Kani, I know you will sing for me at some point, but before you do, what is your call to action?
I think Luke has said a lot, and when Luke is talking, he's actually telling me that is my new responsibility to ensure that we deliver. So I think there's a lot of work coming in 2021. We wish and hope that we partner with KEPSA, CAM members, and all other SMEs that would want to access market-based finance, so that we can assist and just break the myths around accessing the capital markets for sustainability and also to expand their businesses. So that just means that I have an increased plate of work before.
I will still come for my song. If not from you, I'll ask Luke to maybe put it part and parcel of the call to action. But in 2021, they shall be a song. But that is on a light note. Now we are coming to the tail end of today's conversation. But what we've had is that this is not a one-off. This is just the beginning of so many conversations to hear. Whether you're walking through into the Capital Markets Authority of Kenya offices or their website or reaching out to them or the Nairobi Securities Exchange, there are people who are ready, who are willing to listen to you and help you unlock the opportunities that the capital markets provide in terms of unlocking access to capital from the SMEs. Now we will take a vote of thanks from Mr. David Wagema, who's head of the business development team here at the Nairobi Securities Exchange. Mr. Wagema, I can see you there, all smiles. Please unmute your mic and over to you for the vote of thanks.
Thank you, Mbithe. In fact, and indeed, it has been a great day. We've really enjoyed the whole session, and with all protocols observed, and good afternoon to everyone. So on behalf of the Capital Markets Authority and the Nairobi Securities Exchange, we wish to express our heartfelt gratitude to you all for making time and even sparing this opportunity out of your busy schedules to actually come and spend time with us. We could see people from all over different parts of the country as well as internationally, people who've actually spent some time and even taken time, whatever the time zone, to be with us. So we really don't take that for granted, but we are very, very much grateful. And then we'd also like to specifically appreciate and pass our deep appreciation to our guest speakers, the presenters and panelists for the day. We would like to specifically pass our sincere gratitude to Mr. James Ndegwa, the chairman of the Capital Markets Authority, Mr. Kiprono Kitoni, the chairman of the Nairobi Securities Exchange. We had Mr. Wycliffe Shamia, the chief executive, Capital Markets Authority. We also had Mr. Geoffrey Odundo, chief executive, Nairobi Securities Exchange. Mr. Paul Mwai, chairman, Kenya Association of Stockbrokers and Investment Banks, KASIB. Ms. Felix Wakiyaga, Chief Executive Officer of Kenya Association of Manufacturers, Ms. Esther Ndeti, Executive Director from the East Africa Private Equity and Venture Capital Association, IAVCA. We had Ms. Patricia Idao, Director, MSME from the KEPSA, And we had Mr. Daniel Anderetti, Head of Credit Risk and Compliance at Pesesha Limited. We had Ms. Diana Gishaga, the Sector Manager and SME Manager of Kenya Industry and Entrepreneurship Projects 250. We had Mr. Basu Abutola, Chief Executive, Nairobi Business Ventures. Mr. Job Wanjohi Moreithi, Head of Policy, Research and Advocacy at Kenya Association of Manufacturers. Mr. Luke Ombara, Director, Regulatory Policy and Strategy at CMA. Mr. Nkaregamba Mwebesa, we ambushed you, the Chief Executive of CDSC, that is the Central Depository and Settlement Corporation. And we further wish to express our utmost gratitude to the following groups and organizations, as well as institutions: the Capital Markets Authority, the board and management and staff. We had the Nairobi Securities Exchange, board and management and staff, the chief executives and distinguished representatives from listed companies and capital market intermediaries, the Kenya Association of Stockbrokers and Investment Banks, led by their chief executive and board and team, the Kenya Association of Manufacturers and its members, Kenya Private Sector Alliance and its members, the Chamber, the Kenya National Chamber of Commerce and Industry from Nairobi, Mombasa, and the country sectors. We appreciate you. The micro, small, and the micro, medium, small, and small enterprises MSME Authority, the other associations that were present, that was the IAVCA, the REITs Association of Kenya, we had the Fund Managers Association, we had the Association of Collective Investment Schemes, we had also the Kenya Industry Estates umbrella companies, the transactions advisors who are present. We have also law firms that are present, accounting firms, and we also had the Ibuka companies as well as potential and aspiring gems that are present. We had the Association of Startup and SME Enablers in Kenya, the board members as well as the umbrella companies. We have the top 100 SME members, financial stakeholders present, all participants, ladies and gentlemen, a very big thank you to you all. And of course, we can't forget, I think Kanye still owes us a jig. We are really eager on finishing this on a very high note. So we are waiting. You should be standing, Kanye, but we really appreciate you and be there. We love your smile. You've been there throughout. So we really appreciate the effort that has gone to making this event a success. From the preparation, it has really taken a lot, late nights and everything, so that we had a very smoothless and seamless event. Asante sana to our MCs of the day for the excellent job done. A vote of thanks to all the teams that were involved in putting this webinar together, including the capital markets deepening team, the communications and ICT teams of the CMA, and then we also had the NSC business development team, communications as well as ICT teams for making this vision a reality as a team. So we are very grateful. And finally, we'd like to appreciate every single person that took their time and also joined us today. Whether we've mentioned your organization or not, we are deeply indebted to you and we are very grateful for this opportunity. And we appreciate the role that the capital markets plays and you also being a key stakeholder in making this a success. To you all, we appreciate you. And last but not least, we wish to pass our thanks even to God Almighty for making this day a reality and even for sustenance and the gift of life. So we are very grateful to every person that has played one role or the other. And should you have any further questions, you can kindly send an email to smewebinar@cma.or.ke. That is smewebinar@cma.or.ke, and we should be happy to share with you the presentations of the day as well as the speeches. So to everyone, we say asanteni sana, God bless you, and we wish you a Merry Christmas and a prosperous and bullish 2021. Thank you very much. Over to you, Mbide, Kanye.
Thank you, and thank you, Mr. David Wakiyaga, for thanking everybody for today. So, ladies and gentlemen, it has been such an honor, such a privilege to be part of today's forum. That was the National Capital Markets SME Forum 2020, themed Unlocking Access to Finance for SMEs through the capital market. To my co-moderator, Kanye, thank you very much for the insights, energy. I know you want to say today, but it's only a matter of time. And to everybody who has listened to this if you are joining us through the social media platforms, thank you for your time. Thank you for spreading the word. And as always, it takes a village. You've had a list of numerous names counted. Only in the program, we had about 20 names. With us here, wherever we are sitting, we are maintaining our social distance. There was many of us sitting here making everything possible. So thank you all. And remember, don't break the rules. Still sanitize, keep your distance. If you find Kanye on the street, ask him to sing a song for you, if nothing else. From me to you, Merry Christmas. To you, Mr. David Kanye.
Thank you, Mbide. Thank you, Mbide. And I promise you, when my vocals are up, I'll sing a song. That one you can take to the bank. Allow me to invite Sandra to give us a closing prayer and thank God for just having a successful event. Thank you. Sandra.
Good afternoon, everyone. Let's bow down for a word of prayer. Dear God, as we gather here today, we are grateful for your grace and your mercies. Thank you for enabling us to have this forum, for the knowledge you've imparted on our guests, on our speakers, panelists, and for the lives of everyone here. We pray for more informative sessions such as this one in future, and for your continued guidance. We pray for continued growth of innovation within the capital markets, and even for increased performance of SMEs in Kenya. Even as we come to the end of 2020, we pray for our country's leadership, for better economic performance post-COVID, and a happy and prosperous 2021. We pray all this, believing and trusting in your holy name. Amen.
Amen. Yes, we made it. Not allowed to be maintaining. So trust me, I have so much energy. So I think that's the end for us. So maybe he'll sing us a Merry Christmas. I really do not know. My name is Sme Sector. I'm the Chief Executive of Inaugural Group. It's been a pleasure being part of this team. A special thank you to the capital markets and the Amnesty teams for bringing together the National Capital Market SME Forum 2020. If it wasn't for COVID, we'd be having lights and jingles going all out. So from my heart to yours, yay, Merry Christmas. Let's see if David will sing. Over to you, my co-moderator.
Merry Christmas to everyone and happy holidays. And I have been your co-moderator. My name is David Kanye, work for the Capital Markets Authority. And to much more interactive session like this one. And we hope for another SME Forum in the coming year.
All right.
Happy holidays and bye-bye.
I realized I was muted with all my energy. So I was just saying Merry Christmas to everybody. Thank you. My name is Sme Sector. I'm the Chief Executive of the Infallible Group, and it's been such a pleasure. So Kwaherini, and hope to see you again one of these days. And remember, if you see David Kanye on the streets, if you forget the call to action, just ask him for that Christmas check. And once he starts it off, then we know we are on the right way. So let's change the narrative. Let's